Jobs today. One proposal is for a government-backed wage top-up scheme for workers who return to work part-time. Matt?
Take a look at European futures. They are pretty deep in the red right now, looking at drops of 1%, more than 1% on FTSE and DAX futures, as Europe is expected to play a little bit of catch-up with the big drops that we saw in the U.S. yesterday. Let's take a look at the live cash trade as it opens up with the global macro movers screen. You'll see columns of different assets here, and the far left-hand column shows you equity indexes. As they start trading live, they will populate this column. The FTSE straight out of the gate down 0.6%. Typically, we see the IBEX in Madrid open up next. It takes a little bit longer typically for the continental indexes to open up than the FTSE. There you see the IBEX down 1.2%, the CAC 40 down 1.2% as well. So it looks like European markets are opening down about 1% and change right now. That's as warnings from the Federal Reserve on the need for more stimulus in America spooked investors yesterday. Of course, this is a different continent with many different countries, but still, we tend to follow along. Let's bring in Simon French right now to discuss what's going on from Panmure Gordon. He's the chief economist there. And I guess first we'll focus on the U.S., as markets are wont to do, Simon. Do you think that the U.S. needs more stimulus, and is that important as an engine for global growth?
Look, I've thought that economic stimulus from the United States in the form of fiscal policy has been necessary since the midsummer. I'm not alone in that regard. The lack of progress on Capitol Hill in delivering a succession to the CARES Act with the Stalled Heels Act is problematic. But I think what we learned from the testimony from Mnuchin and Powell is that they certainly support a much more targeted suite of economic support, fiscal policy, than was the case at the start of this crisis. And I think that's the way things are evolving. We're learning which industries, which sectors just simply cannot operate economically viably under social distancing, and the fiscal policy needs to be more targeted in phase 2.
And Simon, that's good morning to you. That's something we've heard many times. It's something that politicians have pointed to as well. Can I ask how we go about practically securing that? I think Simon's still with us. I'm going to keep asking my question in the hope that he is. How do we practically decide which of the sectors that need... You're here, Matt. Which of the sectors, Simon, do we decide need support? It's easy to say aviation and retail maybe, and anyone in hospitality perhaps, but there are limits. There are places where these sectors meet each other, and supply chains can be complex. So how do we go about disentangling all of that?
Well, this is one of the reasons why it has been so difficult to get the second phase of policy stimulus through, because actually you find that we might neatly talk about sectors when we talk on air, but unfortunately, the real world doesn't operate like that. And there is a concern about fraud and error in the way that sector-based schemes are performed. And you're right. I mean, at the risk of resorting to a soundbite, it's a bit of a lobbyist charter at the moment. The support is likely to come through for those sectors that have the most effective lobbyists and making the case why their business simply is not viable under free market economics at the moment and needs to be propped up by the state.
Do we see better stimulus efforts here, Simon, than we do in the U.S., or at least from the central bank? We're going to get Teltros. Is that going to be a big boost from Rishi Sunak? Hopefully a little bit more on furlough schemes or Kurzarbeit. Is that going to be a decent boost?
Well, I think it's certainly the case that the longer-term support net for businesses and households is more defined in the European area. Although it's not clear to me that investors are entirely putting perhaps the weight on that social commentators are. Financial investors are saying, well, yes, that is good news in terms of supporting the existing supply side, but, and we've talked about this previously when I've been on your show, there is a problem of transitioning to new patterns of demand. And what I think is an advantage with the European model of supporting the existing supply side becomes an impediment when new patterns of demand come in, because it's very hard politically to say, look, we're going to turn our back on industries that are uneconomic post-COVID and support transitions. I think that's the delicate balancing act that on the continent and also in the UK, when we hear from Chancellor Rishi Sunak later today, that's the delicate balancing act that's got to be struck.
Yeah, and we'll get further detailed thoughts from you on what to expect on the UK side in just a moment, Simon. Just on the sort of more global picture, I was reading the Australian from the Australian government today. They are setting out some fiscal plans, and they were saying they don't plan to start rebuilding fiscal buffers until unemployment gets comfortably down below 6%. And I thought this was an interesting strategy. You set out a sort of short-term firefighting strategy, and then you say, we'll move to long-term thinking and righting the public finances once we've met this certain metric. I wonder if that's something that could spread.
I'm smiling, Anna, because actually fiscal forward guidance is something that I wrote about at the very start of this crisis. What we don't want to be in a situation is where households, businesses conclude that tax rises and spending cuts are coming imminently, and therefore don't respond to stimulus by spending and investing, but by saving, anticipating a crunch to come. And actually, we've heard a lot on monetary forward guidance, conditional forward guidance, state contingent. I think there's a compelling case at the moment for saying, with bond markets where they are, with less of the intellectual hook that Rogoff and Reinhardt and the IMF provided a decade ago to lean back on, fiscal authorities are prepared to wait until the recovery is well entrenched before raising taxes and cutting spending. Very sensible. There isn't a budget constraint right now, and I think that the Australians are at the vanguard there, and I would welcome that.
Keep smiling, Simon, because we're going to keep you with us. Simon French, Panmure Gordon, chief economist, sticks around. Up next, France clamps down while Britain reduces some of the movement and also reaches for its checkbook. We'll look at how Europe is fighting rising virus cases and helping to prop up the economy. This is Bloomberg.
Welcome back to European Market Open. Nearly 10 minutes now into the European trading session, and things looking negative as expected across European equity markets as we catch up with the US of yesterday. France has announced new steps to fight COVID-19. Bars will close earlier and public gatherings in Paris and other cities will be limited. But the government isn't considering another nationwide lockdown. That comes as the UK Chancellor Rishi Sunak sets out a new plan to protect jobs and rescue businesses. Simon French, Panmure Gordon, chief economist, is still with us. And Simon, we tapped in a little to your thoughts on what to expect from Rishi Sunak later on today. Do you expect something that is more targeted then on particular sectors and that perhaps only pays a portion of wages and asks the business to pay more? What will the gist of it be?
So at the height of the pandemic, the state was paying directly around 8 to 9 million UK workers' salaries in the form of the furlough scheme, the job retention scheme. We think that's come down to around 2.5 to 3 million. And the problem with the announcement earlier in the week of a tightening of restrictions is not so much the direct economic impact, but the indirect economic impact on confidence, on consumer spending, on business investment. So what Rishi Sunak needs to do today in the UK is recognise that there are some sectors in the hospitality, leisure, entertainment space, but as we talked about before the break, there are also other parts of the economy that will be unable to operate profitably, economically, under social distancing. He needs to, I think, recognise that in the absence of a vaccine, the state needs to continue to subsidise those sectors, particularly if they think there is a viable economic future for those businesses and those jobs after the pandemic has passed.
What about the concern around zombie companies? I mean, is the UK going to go too far? Does it matter? Is it okay if the pendulum swings too far for now?
Look, the zombie company theory, the view that effectively you delay the rebalancing of supply to deal with new demand is definitely something to concern yourself in more stable economic times. If you think about the last decade, zombie companies was not a reason not to act in 2008, 9, 10. But it probably should have been further up the agenda as the economy recovered in the middle part of the last decade. The same is now true, it is something to worry about when the recovery is entrenched. But right now, you do not want to turn your back on productive capacity that might be required when if a vaccine comes along, because it's going to be far more costly for your economy, for your population, if you let companies and jobs fail that only need to be recreated subsequently.
Simon, we're just getting some breaking lines coming through from the Times in London saying that it's their understanding that Sunak has ruled out making the wage scheme sector-specific. So if he doesn't go down a sector-specific route, if he goes down a different route, which could be reduced support for all areas of the economy, what should he be mindful of there?
One word, it's not a particularly pithy one, but conditionality. What does that mean? That means that if he's going to target labour market support to household incomes, he needs to avoid the fraud and error we spoke about before the break. He needs to make it conditional on something, either that when people are not working, if it's the Kurzarbeit model, if people are not at work but they're being paid by the state, are they taking part in training? Are they doing voluntary work? Is there some sort of signalling to the state that there is some sort of activity? This is what might be necessary and to be fair to, if that line is correct, to be fair to Rishi Sunak, he said that throughout the summer, that the Treasury is concerned that targeting specific sectors is very hard to do for just the reason you mentioned before the break, that we don't fit neatly into categorizations. Even though we might do on equity markets, we talk about sectors, the real world doesn't operate like that.
Does it make sense, Simon, to be more like the Germans, or do you think that the Germans got lucky in a lot of ways?
No, I think there's a lot to like about the Kurzarbeit model. It worked well in 2008-9. You can see that very clearly in the data. We work with a number of German companies and just understanding how the economy evolved and how it gave them their flexibility in 2008-9. It facilitated the recovery. I think moving to a Kurzarbeit-style model, operationally is going to be more the challenge. I mean, intellectually, I don't think there is much of a debate to be had. But as we've found throughout this crisis, the best policies are those that can be operationalized quickly to support businesses and households. It's all very well coming up with a very elegant, sophisticated, targeted model. But if it doesn't survive contact with reality, it can't be delivered by the agents of government. It's no use to man nor beast.
Yeah, I wonder if in the end we might get a number of projects coming through from the Treasury, Simon. That's also possible, isn't it? Some that are across the economy and some that are more targeted. We'll have to wait and see. Simon, thanks so much for your time. Simon French, Pramil Gordon, Chief Economist. Simon will be continuing his conversation with Matt and I on Bloomberg Radio at 9 a.m. UK time. Let's go to Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. JP Morgan is the latest bank to halt plans to bring more workers back to its London base. It follows similar efforts by Goldman Sachs, Citigroup and others. But while some lenders have encouraged people to work from home, JP Morgan says its business units will decide who is needed in the office and who isn't. Jack Ma's Ant Group is looking to raise $17.5 billion in its Hong Kong share sale. And sources tell Bloomberg it won't seek to lock in any cornerstone investors. It's confident there will be plenty of demand for one of the largest equity deals in the city. Ant may invite the big investors for a Shanghai sale to mitigate price fluctuations. Westpac is paying a record fine of 1.3 billion Australian dollars to settle the nation's biggest breach of money laundering laws. It caps a saga that shredded the bank's reputation and cost its former chief executive his job. It's the largest fine levied against an Australian company. It's also more than the 900 million Aussie dollars Westpac put aside for the penalty. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there with the Business Flash. Now, Jerome Powell is pleading for more stimulus while highlighting the long road to economic recovery. During his second day testifying before a House panel, he pushed back against suggestions that the Fed favored markets over people during the pandemic. In an exclusive interview with Bloomberg, Federal Reserve Vice Chairman Richard Clarida agreed with his boss.
What we're saying quite simply is that perhaps in a normal recession, or perhaps if we were back in February, then obviously getting to 2% and moderately exceeding 2% would be within our forecast horizon. But because of the depth of the shock, the economy has to recover. And as I said, in our baseline, that recovery relative to the last downturn will occur within about three plus years. But until we get to that point, overshooting is just an academic point. And we actually want to get the economy to 2% inflation and maximum employment. And we think, along with fiscal support, that can happen.
Meanwhile, fund manager after fund manager has come on this show and said that we are at risk of creating an asset price bubble, if not having created it already. How does that factor into your calculus about when to tighten policy?
Well, that's a good question. And obviously, financial stability is always, and certainly in the Powell Fed, an important consideration. We get regular briefings on financial stability. We issue a twice yearly report. So we're very attentive and attuned to that risk. But it's also important to remember, Lisa, we have a dual mandate assigned from Congress, which is maximum employment and price stability. If hypothetically we were to become concerned that financial stability put our maximum employment and price stability goals at risk, then we would have to factor that in. But Lisa, we also believe that monetary policy, raising or lowering rates, is a pretty blunt instrument, and our inclination and our preference at the Fed is to work with other agencies on regulation, supervision, bank liquidity, and other dimensions than simply raising or lowering rates to deal with financial stability.
I guess another way of asking this is, how effective can the Fed be without more fiscal support, without another round in Washington, D.C. that's substantial, that injects direct aid to companies, to individuals?
Well, as Chair Powell indicated, and we all believe, obviously fiscal policy is for the Congress and the executive branch. But when asked, what we'll say is we do think that additional fiscal support will likely be needed. I think it's very clear that the CARES Act, which passed in March, was really a historic government response to a historic crisis. A $3 trillion package provided significant support to the economy. The economy's made a lot of progress, Lisa. About 11 million jobs have returned, but there's still a deep hole. We still have a very high rate of unemployment. We have a lot of small and medium-sized businesses that are suffering. And so, yes, additional fiscal support will likely be needed.
That was the Fed Vice Chairman, Richard Clarida, sounding the alarm on the need for fiscal support. Coming up on the programme, we've been discussing this already. We'll get further analysis. UK Chancellor Rishi Sunak will set out a new crisis aid package, including a German-style programme. But how strong has the German recovery been? We discuss next. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open right now, 22 minutes into the session, looking at a 1% drop in London on the FTSE, the DAX down 0.6, and the CAC about 8. So we're playing a little bit of catch up with the U.S. after its big drops yesterday. European markets had closed up, and now we're down to match. Now, Germany's IFO survey is due out in the next hour, typically one of the best indicators of the region's economic growth. At the same time, the UK's Rishi Sunak is looking at aid that would include a German-style subsidy program. Joining us to discuss the copycat mentality is Danny Berger. So, Danny, we've had a decent recovery here in Germany, stronger than other European countries, right?
Yeah, it definitely has been. Matt, one of the things that I really like to look at this is some of the higher frequency data, which I've charted a lot of the mobility ones here, just because a lot of the surveys and figures can be very backwards looking, but this gives us a more up-to-date measure. And from what we can see, the consumer behavior has in large parts returned to normal. For example, this blue line here is restaurant bookings on Open Table, easy to track, and that is back to pre-virus levels. The purple one, that's truck mileage, so more commerce moving around. And then we have footfall in the yellow, as well as public transportation use, and those are both moving higher, and I should say much stronger than what we are seeing in the UK. Now, part of that is, of course, help that Germany has given to the economy in the forms of different stimulus, but another one, this is one of my favorite indices, I think, for looking at the virus. So this is an Oxford stringency index, and basically the higher it is, the more strict restrictions are to protect the public from coronavirus. So I have Germany in the white here versus the UK in yellow and France in the blue. And one of the things you can see with Germany is it steps in a bit later than some of the European countries when it comes to measures. And then those measures are less strict than other countries. You can see it's about even with France, though this index does move on a lag, so we're likely to see France jump up with the latest restrictions. But this also helped restore the consumer behavior back to what it normally was because it didn't have to take too much of a hit.
Really interesting, Danny. But of course, we're talking a lot about the German labour market and whether other countries should copy it. We shouldn't be under any illusions that Germany hasn't suffered from job losses as a result of this crisis.
That's absolutely right. I mean, you can see the jobless rate really picked up in Germany. And part of the thing here is because of Kurzarbeit, the stimulus program, which helps pay for part of furloughed workers' wages, this actually might conceal some of the slack in the labour market as well. And over the past month, we've heard companies based in Germany announce increasing more job cuts. That includes BASF, we heard about last week, TUI, VW. We get these cuts, and yesterday we heard from Daimler announcing about 4,000 planned job cuts. So yes, the pain in the labor market is certainly still there, something that I'm sure the UK is keeping in mind as they examine some of these German-type aid programs.
Yeah, definitely watching those, especially the automotive layoffs, really starting to take off here in Germany. Danny, thanks very much. Coming up, we're going to speak with Philip Drury. We're going to speak to the head of the EMEA Banking and Capital Markets at Citigroup, Philip Drury. This is Bloomberg.
Welcome back to the European Market Open. 30 minutes into Thursday's trading session. European equity markets on the back foot as we were in the US yesterday, and we're catching up essentially. So we're down by 1.1% on the stock 600. Concern around US fiscal stimulus and how forthcoming that will be this side of the election or next. That seems to be part of the conversation. US futures also moving to the downside by between 4 and 0.5%. Just brief look at the sectors. We've got travel and leisure as the worst performing. I know Ryanair is trading weaker. Retail is also to the downside, this on the GRR function on the Bloomberg, and we've got retailers of all stripes. It seems anything exposed to the coronavirus is under pressure in today's session, to the upside, or nothing to the upside. In fact, no sectors moving to the upside. Well, just one right at the top there. Matt, let's get to some breaking news.
Yeah, even real estate really not moving around that much. If you type SNB Go on your Bloomberg terminal, you will be taken to our homepage for the Swiss National Bank. You'll see that they've maintained their policy rate at minus 75 basis points, as had been expected. So the SNB also putting out some forecasts for 2020. The SNB, for example, sees GDP contracting by around 5% this year. Not necessarily surprising, and neither is the move or lack thereof to hold rates at negative 75 basis points. Nonetheless, interesting and maybe important to you. Let's get now to Bloomberg First Word News. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. TikTok owner ByteDance is asking a federal judge to stop President Donald Trump from banning the video app, removing it from US app stores this weekend. It comes as Beijing is threatening to kill off a deal over what state media calls dirty tactics and an American trap. Who will own what in a new global TikTok is still a contentious issue. President Donald Trump says the Supreme Court will likely have to decide the outcome of the November election. He's arguing he needs to confirm a new justice to replace the late Ruth Bader Ginsburg to break any tie. He's casting doubt on the validity of the election, reiterating his criticism of mail-in voting. France is cracking down on bars and gyms, introducing new measures to help stop the spread of the coronavirus. It's limiting public gatherings in Paris and several other cities, but the government is not planning a new nationwide lockdown. The Marseille area is currently one of the worst affected, and all restaurants and bars will be shut. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Laura, thank you. Laura Wright here in London. Rishi Sunak has cancelled his planned autumn budget to prepare a fresh round of jobs and business support. The UK Chancellor is studying German-style measures to replace existing subsidies that end in October. Sunak is expected to give an update on his plans later on today. Let's talk to Bloomberg's Brexit editor, Edward Evans, keeping it close here to Westminster, of course. Good to speak to you, Ed. So Times Radio has reported that Sunak will announce a non-sector specific wage support scheme. What are we expecting him to say? That might be the case. I wonder if there might be more than one measure, though. We just don't know at this point.
We don't know at this point, but the messaging from the government has been slightly mixed. Matt Hancock's been out on the media rounds this morning suggesting it will actually be targeted support. But what it is a sign of how the virus has forced Sunak's hand. This has not been the short, sharp shock to the economy that Johnson and Sunak envisaged back in March. That time, if you remember, Johnson was talking about getting the virus under control within 3 months. And the furlough scheme and some of these business support programs were essentially designed for that situation. Furlough is designed to protect people's consumption from a short, sharp shock and get it back to normal as quickly as possible thereafter. That's fine if it's a 3 months problem. If we're still going through this virus after a year, which is very possible, then it becomes very expensive and they need to find a replacement. Hence why the talk about phasing out furlough and replacing it with something close to the German Kurzarbeit scheme. This is where some of the costs are met by employers as well. You'll also expect to see some extensions to the business loan programs. Again, these were programs that were due to be phased out in the coming weeks and months. Those are going to have to run further. And it really is a sign of just how long this is going to go on for. The Treasury is very much now in crisis mode. And in that situation, it's very hard to make long-term plans about spending when you've still got to deal with the virus.
Ed, what does the Conservative Party, what does the base of the Conservative Party really think about these Keynesian debt-fueled spending plans?
Short answer, I think they recognise there's a threat to the economy here, and Sunak's have actually pretty widespread backing within the party for his measures. I think he's one of the few in the cabinet whose reputation has come out enhanced. I think if you look at the personal polling, it's still very high, and that's in part because he has been able to spend money and spend money quickly at this point. You've had things like Eat Out to help out and the furlough scheme. Now, none of them have been perfect. There have been criticisms over the furlough scheme and how it neglected the self-employed in particular. But in general, they've been pretty supportive. I think it gets much more interesting in the longer term if this crisis goes on. I mean, Johnson's talking about the virus being here for another 6 months. If it goes on even longer than that, how sustainable is it? Now, on the market side, you can see the cost of borrowing for the countries at the lowest ever. So the increase in the national debt isn't such a problem. But politically, at some point, there will be most likely a snapback in the Conservative Party towards a balanced budget and towards at some point some very difficult decisions about taxes, which ones have to rise, and spending, which areas that have to be cut.
Ed, just weeks ago, we were, well, less than weeks actually, we were deep in conversation about the internal markets bill and the falling out within the Conservative Party between them and the Europeans around how the Brexit negotiations progress, and what has happened with that, because there was one vote and it moved on to another stage, but is it now on the back burner?
Slightly. It's going to go through the Lords in a moment, and I think that's where you're going to see, you could well see a very serious rebellion. You've had people like Michael Howard, who of course spoke on Bloomberg Television fairly recently, threatening to rebel on this. And don't forget, the government does not have a majority in the House of Lords. The Lords can't block the bill, but it can certainly delay it. The government's got till the end of the month to withdraw or amend the bill, or the EU is threatening legal action. We're going to have to see what the EU chooses to do. It's quite a slow and difficult process, but legally speaking, but politically, of course, the EU's got the big stick of, well, we're not going to give the UK a trade deal as long as this bill is outstanding. So it is slowly coming to a head early next month, where you will see either the bill has to be withdrawn or there has to be a compromise between the two, or there is no deal.
All right, Ed, thanks very much for joining us. Bloomberg's Brexit editor Edward Evans there talking to us about this developing story that we will continue to follow for you. Up next, JP Morgan is set to shell out up to $1 billion in the biggest spoofing penalty ever. We'll get more with our finance editor Tom Metcalf. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open right now, 40 minutes into the session, and we're looking at a drop in stocks. Although it should be said, it has to be said, not nearly as significant as the slump we saw yesterday in the U.S. U.S. stocks yesterday fell 2% or more, and we're only looking at less than 1% drops here. So with that said, let's move on to one of the big stories for us. JP Morgan set to cough up almost $1 billion in the biggest spoofing penalty of all time. The record settlement for the U.S. investment bank would end several probes into Treasury and metal market manipulation. Bloomberg has learned that the final amount could be announced as soon as this week. Our finance editor, Tom Metcalf, joins us for more. And Tom, let's talk first of all about where this fine ranks in terms of other fines, in terms of other spoofing issues.
Yeah, well, look, in terms of spoofing fines, it's absolutely enormous. So before this one, if indeed it is going to be 10 figures, the biggest was, applied to the Bank of Nova Scotia for about $125 million. And then the other sort of spoofing fine people always look for is Citigroup, which was just $25 million. So it's an absolutely enormous figure. And I think, the kind of fact that it's 10 times basically as big as the previous record goes to show kind of how sweeping and serious the investigation was.
I know you have some thoughts on whether this is a good or a bad result for JP Morgan. I guess given what you just said, that it's bad if it's that big compared to history. What are your thoughts?
Yeah, so I mean, it's definitely larger than expected. That's kind of the feedback getting from analysts. So where it will impact JP is maybe it drives a cut to their kind of expected net income in the next quarter. So if you looked at their share price yesterday when Bloomberg broke this news, it dipped, but not a huge amount. It dipped to about 1%, 2%. So perhaps larger than expected, but JP Morgan, biggest bank in the US, it can easily absorb even a fine of $1 billion. So I suspect the thing to do is watch what they do in early trading, and we'll get a good sense of how shareholders sort of have fallen on the issue.
So what's happening, Tom, to the employees involved in what at the time was a fairly common market practice?
Yeah, I mean, spoofing is definitely widespread, and it's something regulators and market watchers are trying to clamp down on. So, the interesting here is obviously JP Morgan, will pay this enormous fine, and it seems that will kind of end all the investigations, and they won't have to plead guilty, etc. But when you look at the individual employees involved, basically last year they had criminal charges filed against them, including the former head of the precious metals desk at JP. So, in that case, the Justice Department were using racketeering laws to sort of bring these charges. So it's an interesting disconnect between what the kind of employers directly implicated are facing and then the firm itself. And it should be noted that the employees have all pleaded not guilty. But yeah, that case is still proceeding. But it seems like JP as a firm is on the way to getting their issue resolved.
Yeah, how widespread is spoofing then in this market or in others, Tom? Does this suggest there'll be further fines?
Yeah, I mean, there's been lots of cases over the years, and it really kind of involves all sorts of market players. So you've had kind of high-frequency trading shops being charged. You've got big banks as well, like obviously JP Morgan, but also Bank of America, Deutsche Bank. Perhaps the one your audience might best remember is someone who was termed the Hound of Hounslow. That was Navinder Sarayo, who was a day trader and sort of implicated in causing the flash crash. So it's one of those issues that is very much a hot topic for regulators, and I think as the size of this fine shows, it's likely to remain the case for a while.
Remember it well. Thanks, Tom. Thanks very much. Our finance editor, Tom Metcalf. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Jack Ma's Ant Group is looking to raise $17.5 billion in its Hong Kong share sale, and sources tell Bloomberg it won't seek to lock in any cornerstone investors. It's confident there will be plenty of demand for one of the largest equity deals in the city. Ant may invite the big investors for a Shanghai sale to mitigate price fluctuations. Westpac is paying a record fine of 1.3 billion Australian dollars to settle the nation's biggest breach of money laundering laws. It caps a saga that shredded the bank's reputation and cost its former chief executive his job. It's the largest fine levied against an Australian company. It's also more than the 900 million Aussie dollars Westpac put aside for the penalty. California plans to ban new gasoline-powered cars by 2035 as part of the fight against climate change. Governor Gavin Newsom's announcement comes as the state is battling historic wildfires. He touted California's existing strength in electric vehicles, saying it accounts for about half of the nation's EV market. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there with the Business Flash out of London. Now, NatWest CEO Alison Rose spoke to Bloomberg's Francine Lacroix about setting targets, encouraging women into banking, and creating a more diverse and inclusive culture. Rose adds that this isn't a nice to do, it's an absolute business imperative at the Bloomberg Equality Summit virtual event.
We're very clear that we've set targets. I'm a great believer in if you don't measure it, it doesn't get done. So we have a very broad program around helping encourage women coming into banking, encouraging girls to think about banking. I have a program called Dream Bigger, which goes into schools and encourages girls to think about finance as a career, to think about entrepreneurship as a career, to work on resilience and really encourage more people into the pipeline. But we set targets at our top 4 levels. We have a fully diverse represented board. My executive team now is over 30% female, and we have targets at our CEO -4 level, right the way through the organization to encourage all elements of diversity and inclusivity. And all of my team are encouraged to embrace it, as well as broader elements of inclusivity. But I think you set targets, you put interventions in place, and you create a culture that hopefully will encourage people and allow that talent to thrive.
Why do you think not enough females actually join banking in the first place? Is it a cultural thing? Is it a perception? Is it seen as too aggressive?
I think historically, the financial sector has been very male dominated. When I started my career, I joined areas where I was the only woman in the room, and that was, for a long time part of the environment I operated in. So I think it sort of starts from having a perception of being like that. But the culture of banking has changed enormously. We need to do a better job of explaining the fact you can have 1,000 different careers in one organization and what an exciting environment it is, and then create the culture that people can really be their whole selves when they come here. And increasingly seeing more women come into banking. What we need to do is now get more women through into executive positions so that they really can make a difference, so that you've got a really diverse workforce. I know certainly being part of diverse teams is fantastic because you get different perspectives, different challenge, different creativity, which makes you more competitive. So making sure we can really articulate the attraction of this industry, I think will encourage more women to join.
Do you ever get pushback with some of these initiatives or some of the things you're trying to do and change?
No, I mean, a lot of what I get when I've driven diverse debates and the cultural change, it is a ask for help from people. Why am I not attracting more women? Why do I have an inclusivity problem? How do we address this? And a lot of it is unconscious bias. You have to look at talent in a very different way rather than through the lens with which you would typically look at it. So generally, I don't get pushback. I get an ask for how can I get the best talent? How can I get help? And I think explaining the business case, explaining the imperative, this isn't a nice to do. This is an absolute business imperative. And so it's asking for help, asking for interventions.
That was Alison Rose, the CEO of the NatWest Group, speaking at the Bloomberg Equality Summit. Up next, which assets suffer most from deleveraging? We will put that question to the Markets Live team. To Heather Burke, our Markets Live editor. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 52 minutes into the session. We're looking at losses, but they're not more than 1%. In fact, right now the FTSE is down only 0.6%. The DAX falling only 0.3. Let's get into the markets with Heather Burke, our MLive editor. And Heather, you know, we're looking at this as a very risk-off session just because we're coming from the U.S. where the slump was once again, you know, 1 or 2%. Here in Europe, we're not doing quite as poorly. What's the difference?
I mean, you're definitely seeing some catch-up in Europe. That seems to kind of be the story. The sell-off, you know, that's the big thing. We're seeing a big sell-off in travel shares again, and leisure shares amid fresh restrictions coming across Europe, lockdown light. But basically, while some of the early declines have paired, it's definitely kind of more of this global risk-off fears that Europe has capitulated to.
Yeah, I guess that's where we will see some of this pain coming through, is in some of those sectors then, Heather. What about the UK story? We're waiting to hear from the Chancellor a little bit later about how he plans to move on from the furlough scheme. That's going, but something might be taking its place, we understand, some kind of support for the jobs market at least. How is the market positioning into that?
Well,
oh,
do you know, that's that sound
it was
again,
one of those notorious phone calls. You know, phones, I find, just get disconnected all the time. Yeah.
Yeah, we don't have much luck with these phone calls.
We've got to think of a new technology.
Maybe we'll move everybody to video. European equity markets then on the back foot, but you were making the point about the transatlantic sort of catch-up, and we are seeing that, obviously. But it's worth noting US futures have actually been improving quite a bit over the last half hour or so. So US futures now down just between 1 and 0.3%. So not the scale of the losses that we were seeing a little bit earlier on. But we started this program talking about things being very risk-off. The dollar was catching a bid, and that might come back to be the story. But the dollar's pretty flat now, even though that has been obviously an expression of nervousness, a place of haven that investors have fled to at times where we've seen panic, such as in March and what we were starting to see at the beginning of this week.
Yeah, well, I think you've seen a real recovery in assets. We still have red arrows across European equity indexes. But remember, we were down, 1.5% at the beginning of this session, and now we're back up to losses on the DAX, only 0.25%. So only 29 points off on the DAX, which is at 12,613. In the U.S., it was worse before the close, and then U.S. equity indexes closed down about 2% yesterday. The Dow doing a little bit better, but not much. And now in the U.S., you're seeing futures that are really little changed. I mean, only 0.07% down on Dow and S&P futures. So it may not be such a risk-on session after all on Wall Street.
Yeah, when we're looking ahead to this news from Rishi Sunak, the Chancellor in the UK, ahead of that, 127.29, fairly flat on the pound fairly choppy as we wait for news around jobs, waiting for news from Westminster, essentially, from the Chancellor as to what he plans to replace the furlough scheme with at the end of October. This is Bloomberg.
Grim tidings. Market slump as warnings from the Fed on the need for more stimulus ignite fresh jitters. Powell and Mnuchin take the stage again today. President Trump refuses to commit a peaceful transfer of power post-election. He's currently trailing Joe Biden in national polls. The election is 40 days away. And Rishi Sunak's winter economic plan is coming. The chancellor will set out a new crisis plan to protect jobs today. Measures could include extending employee wage support. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Quite a lot going on in the markets now. They really are mirroring the amount of news that we're getting out there. So let's get straight to what the European stocks are doing, down some 0.5%, 357. Now, stocks are really falling with the U.S. futures as well. Oil dropping below $40 a barrel. Again, Jay Powell of the Fed says the economic rebound, it likely needs more support, and that brings a lot of questions on the next phase for central banks and what they could or couldn't do. In terms of what we're getting from IFO, it's also breaking. It's always good to have an idea of what's going on with the German economy. That September German Business Confidence Index, pretty much in line with expectations, maybe just a touch below at 93.4 instead of the 93.8 expected. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Over in the U.S., 2 police officers have been shot amid protests in Louisville, Kentucky. One of the officers is undergoing surgery and a suspect is now in custody. The latest violence was sparked by a grand jury decision not to file murder charges against police officers involved in the fatal shooting of Breonna Taylor. One officer faces a lesser charge of wanton endangerment for firing into neighboring apartments. Now, the UK is considering its first vaccine studies that will deliberately expose healthy people to the coronavirus. The idea of so-called challenge trials has gained momentum recently, and a growing number of volunteers have signed up to now take part. This type of study can speed up research, but raises ethical questions about exposing people to a potentially fatal virus. And France is cracking down on bars and gyms, introducing new measures to help stop the spread of coronavirus. It's limiting public gatherings in Paris and several other cities, but the government isn't planning a new national lockdown. The Marseille area is currently one of the worst affected, and all restaurants and bars will be shut there. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Let's kick it off with the latest on the markets. European stocks in the red this morning, joining a global sell-off. That's as warnings from the Federal Reserve on the need for more stimulus injected fresh jitters onto an already weak September for equities. Well, the dollar, meanwhile, advancing to its highest level in 7 weeks as currency traders bet on a volatile end to the year. Well, joining us now to talk FX, Jordan Rochester, FX strategist at Nomura. Jordan, great to have you. The day after we heard from Powell on the need for extra stimulus, what happens to dollar?
Well, Francine, we've been in this strange position where during the summer it's been a dollar sell-off thanks to European growth expectations outpacing that of the US. Now, what's happening now is we're starting to get to a place where coronavirus cases are rising again. We're having fiscal stimulus in the US become much more questionable into this election cycle. And that's going to hurt US growth, but it's also going to hurt risk appetite. And the fact that's outweighing the one right now is the risk appetite side of things. And when risk appetite falls, consensus positions, where there's crowded positioning, where everyone's got the same trade on, start to hurt, Francine. And that's the short dollar trade that's built up over this summer. So even though it's a U.S. story in terms of growth expectations being dampened by the lack of a fiscal stimulus agreement between Democrats and Republicans, it's hurting risk sentiment, and therefore the dollar's bouncing back here.
When you look at euro, I mean, at what point does euro strength actually become a real problem for the ECB? Is there a chance that we enter into a currency war?
Well, I don't think it's going to be a currency war per se, Francine. It's not really a problem compared to the coronavirus. Like, in terms of the impact on GDP, impact on trade, impact on inflation, there is a currency element to it. It definitely weighs on inflation when the currency gets stronger. But dealing with the COVID-19 situation is just so much more important. The volatility of GDP and inflation from that coronavirus, lockdowns and so forth, is just so much more important than the currency. So when the ECB started talking about the currency more, for us, it wasn't a big deal in terms of it did slow down the move higher in euro, but it wasn't a reason to flip short. I've just recently entered short euro-dollar positions. I've also gone long the dollar against Norwegian kroner as well. And that was more on the back of this risk sentiment, this sort of news from the US with Justice Ginsburg passing away, and the stalemate that would create in Congress made the likelihood of stimulus on the fiscal side in the US drive that long dollar view.
Jordan, what do you do with the Swiss franc? So at the moment, we heard from S&B this morning, leaving policy rates and deposit rate unchanged. Will they have to intervene into the FX market more?
They absolutely have to, and they already are, Francine. We saw much bigger intervention earlier this year in March and April. There's been much smaller intervention recently because I didn't need to, but I had a client ask me yesterday, why is it when Euro's weaker, Euro-Swiss isn't moving lower? Why is it when Euro's stronger, Euro-Swiss isn't moving higher? And the reason is the S&B consistently leaning against the wind in terms of FX price action. So the Swiss franc will be used as a funding currency thanks to its low interest rate. But there is no attraction in buying Euro-Swiss downside, for example, just because I have a central bank that's constantly fighting against me. So for me, Euro-Swiss is very much a range-bound sort of trade.
Jordan, finally, let's talk about pound, given what we saw in terms of extra restrictions because of coronavirus, but also Brexit looming. How low can it go?
Well, Francine, it can definitely go lower. Against the euro, it can go up to 94 to 98. That's 98 is our sort of euro sterling no deal level. No deal for cable is around 120. Now, one thing that we have to make clear is no deal is now much less of a scary prospect for FX markets, thanks to the experience of COVID-19. What can happen, though, is we have a coronavirus situation building again this winter, and no deal Brexit weighing on the pound. So 120 is my that's the Brexit impact. But if we also have a coronavirus lockdown, we could be talking below that again. We saw 115 very, very briefly during the madness of March. We can see these sorts of levels again, Francine, if we go for no deal and the UK suffering from a coronavirus lockdown once again.
Thank you so much, Jordan Rochester, their FX strategist at Nomura. Too short a time, so we'll have to get back to Jordan to go through some of his other calls. Up next, we're in conversation with Annelies Dodds, the Labour Shadow Chancellor. We'll talk about the economic recovery plan here in the UK, of course. We'll also talk COVID-19. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, he's calling it its winter economic plan. New coronavirus restrictions have pushed the UK Chancellor Rishi Sunak to set out new measures to protect jobs and businesses. The government has scrapped a planned autumn budget and will instead focus on extra state cash for wages. Well, joining us now to discuss all this is the UK Shadow Chancellor, Anneliese Dodds. Thank you so much, Anneliese Dodds, for joining us on Bloomberg Surveillance. I know you've pushed quite hard against some of the spending plans that actually the government has put in place, but it seems that we're in a tricky situation now, given the extra restrictions. What would you do differently?
Well, we are in a very, very difficult situation, and obviously the UK is particularly suffering currently. By many projections, we'll have the deepest recession in the G7, potentially a very slow recovery as well compared to many other nations. And we've been calling on the Chancellor for some time to take a longer-term view. Above all, we've been calling, in fact, I called 40 times for the Chancellor to look into introducing a system of targeted wage support like that which operates in Germany. Now, it's taken a very, very long time for him to announce that. Looks like he's going to do that today. But of course, that's come in after the announcement of additional restrictions and actually after some of the deadlines for redundancy consultations have started before the end of our furlough scheme. So we really need to see much quicker action and effective action. And as a constructive opposition, Labour stands ready to work with the Chancellor if he's willing to work with us, as well as with businesses and trade unions, to get this right.
But your criticism goes, Anneliese Dodds, to the amount that they're spending, because actually no Tory Chancellor has spent as much so far in recent history than Rishi Sunak. So is it the amount, or is it where they're targeting the money?
It's absolutely the latter. It's where money is being targeted. It's the fact that we're having a very slow response. Quite often in the UK, we've had public health measures being announced, but without the economic measures being announced at the same time. There's been a lag, and it's been a damaging lag. So really, we need the government to get a grip on this in the UK. Around wage support, for example, we haven't been calling for just a continuation of the UK's furlough scheme, which backs wages up to 80% and then is being withdrawn gradually. Instead, we said, let's have a targeted approach, one that really incentivises short hours working, then with a subsidy from government. We think that kind of targeted approach is really, really needed now, and it needs to be put in place much more quickly than we've seen so far from the Conservative government.
I mean, do the extra restrictions, change your view at all because the situation is trickier, or do you think that some of the things you've been calling for are even more urgently needed because we're really facing, a pretty difficult economy over the next 2 to 3 years, given the restrictions possibly put in place for 6 months?
Well, that's right, and I think that the argument for targeted wage support has become much stronger. In fact, the government said they didn't want to introduce it 20 times when I called on them to do so. So clearly they've changed their minds quite rightly around that. But there are other areas where we really will need to see action given the depth of recession that we're facing right now. In particular, we really need to see that big training and retraining programme that's so necessary in the UK. We've got very weak systems, unfortunately, a lack of capacity in that area. The government's actually already allocated funding for a national skills strategy, but it's not being used right now. It needs to be used now to put that support into place for people who've already become unemployed. But we also need to see government facing up to the debt crisis that many smaller companies will be facing. Sounds like the Chancellor might be potentially extending some of those coronavirus-related loan schemes in his statement this afternoon. We'll wait to see what he's announcing, but we need to have a longer-term plan around this. We need businesses to be able to invest and particularly to take on new staff if they possibly can.
I mean, in other parts of Europe, certain countries, governments are actually taking active states and companies as a way of support. Should the UK do the same?
Well, we really don't think that the Conservative government should be ideological about this. We think they've got to be pragmatic. There will be cases where actually an equity stake would be the appropriate way forward, one which delivers value for money. And I've been consistently very, very clear that we need to make sure that there are conditions placed on the use of public money. We've not seen that actually very much from the UK government. I think that's a big problem because it means that in some cases some of the schemes haven't been used in the direction they were intended. But we want government to be open-minded around this. There are industries like, for example, aviation in the UK, where there will need to be substantial change for the future because of the climate crisis, because of, sadly, what looks like a reduction in demand structurally. And we need government to be much more actively involved in that sector, you know, planning for the future with businesses, with trade unions to get us to a better place.
Annelies, I mean, if we were actually to take, you know, the UK not to rule out anything, is there a company or is there a sector where you think the UK government should be much more actively involved in taking stakes or giving much more support?
Well, I think there are a variety of different ways for government to intervene in order to protect our economic capacity. I mean, I've been particularly concerned, given the lack of progress around wage support until it appears today, with what's occurring in the UK aerospace industry and indeed in our arts industries, creative industries. Now, both of them are absolutely critical for our exports in the UK. They're also very, very important in terms of employment, and the kind of supply chain that applies to aerospace, of course, impacts on very large numbers of jobs. Very, very important for our environmental progress in the future as well. And, you know, until now, we've seen very little coming from government in relation to supporting jobs in those sectors. Of course, we're going to have to look very carefully at what the Chancellor announces around wage support. I do think that will help if he puts the right scheme into place to protect employment, but we're waiting to see the details.
Can we afford more debt given the current gilt market? This is a question that investors write in to try and figure out on the UK, especially international investors. And at what point do you think too much debt is the biggest concern of the UK?
Well, clearly we're in a situation where interest rates are currently low, but that won't necessarily continue forever. However, I think it's really important when we look at these questions that we focus on especially the size of the UK's tax base. Now, very obviously, that's shrinking right now because people are losing their jobs. They're spending much less because their income is going down. Also, businesses are becoming insolvent. All of that really strongly impacts on our tax base. We need to do what we can to try and preserve economic capacity, try and maintain the size of that tax base. I think that's really, really important going forward. You know, in the middle of the deepest recession in 300 years in the UK, preserving our tax base, preserving economic capacity is really the most important thing right now so that we can have that, hopefully, recovery that we really need to see.
Thank you so much. The UK Shadow Chancellor there, Annelies Dodds, speaking to us today, of course, on this stimulus plan that will be announced by the Chancellor. Thank you, Annelies Dodds. Now, coming up, the future of Europe's biggest economy, we speak to Clemens Fuest, the president of Germany's IFO Institute. That conversation is up shortly, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, coming up, we have quite a lot talking to, of course, about what's been going on in the markets. And so one of the things that we're looking at, of course, is euro-dollar and all the dynamics. A couple of data points also. We had the IFO this morning, and I'm delighted to be joined by Clemens Fuest. He's president of the IFO Institute, to talk about the economy and to talk about what exactly has been going on in Germany. Mr. Fuest, thank you so much for joining us. You know, when we look at the business confidence, 93.4, just a touch below estimates, but really pretty much in line with estimates. Do you worry that with the coronavirus cases actually rising and on the rise, it will mean a big hit for consumption?
There is a risk, no doubt about that. I mean, what's driving the recovery in the index at the moment is manufacturing mostly. So we see improvements there, and that's related to exports to some of our trade partners going quite well. Also to businesses, to manufacturing in other countries recovering, but there clearly is a risk that the second wave of the virus will cause problems. We see this in the readings for the service sector, which isn't great this time. So so we ask companies about the current situation and expectations are going down in services. That means companies are worried about the second wave here.
So how confident are you in your forecasts, given the rising uncertainty that we're dealing with now?
At this stage, clearly forecasts are very difficult, no doubt about that. It's very hard to assess how the infections will go, how the pandemic will play out. In addition, we have uncertainty about US elections and all that surrounds it. And on top of that, we have the Brexit negotiations that are kind of stuck. So there's a lot of uncertainty around. Forecasts are just scenarios that need to make assumptions. They are very uncertain, no doubt.
If you look at, what we've been seeing overall about the furlough scheme in many European countries, what's the right thing for the German government to do right now to make sure the economy is fully supported as much as they can afford to?
So the German government has come up with a lot of stimulus. That was the right thing to do. And I think at the current stage, it's important to continue doing this. I think there's no reason to extend stimulus at this point in time. But at the same time, it would be much too early to think about scaling back stimulus. So just continue what's been decided, including the furlough scheme, is good. And early next year, I suppose, we will know more about where the economy is going, and then new decisions can be made.
Do you think the German model should be a great example for other European countries to follow suit in terms of extending support to businesses and the economy?
I frankly don't think so. So we have furlough schemes in other countries, and I think that the relatively benign situation in Germany is related to the sectoral structure, which is more oriented towards industry and manufacturing. And then we have to see that Germany was hit later than other countries, especially Southern European countries, by the pandemic. And that's why infection numbers were lower, and that has contributed to the better economic situation. So it's not just miraculous economic policies.
Mr. Fuest, can you give me an update on how you're expecting, trade to go ahead before the U.S. election? Or, I mean, we were worried for a long time that the Trump administration would put tariffs on German car makers. Do you think that risk is now less because we're so close to the election?
I think the focus at the moment is elsewhere, not so much on EU U.S. trade. I think the U.S. administration has also understood that U.S. and EU trade is less imbalanced if we include services than many people think. So there's little to be won for the U.S. administration from a trade war with Europe. This is more an issue currently with China, it seems. So I wouldn't expect any problems on that front, at least.
Thank you. Thank you so much for your time. Clemens Fuest there, the president of the IFO Institute. Coming up, we talk about President Trump and the elections. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. TikTok owner ByteDance is asking a federal judge to stop President Trump from banning the video app by removing it from U.S. app stores this weekend. It comes as Beijing is threatening to kill off a deal over what state media calls dirty tactics and an American trap. Who will own what in the new global TikTok is still a contentious issue. Now, Italy expects debt to rise to about 160% of GDP by the end of the year. Sources told Bloomberg of the new provisional figures, which also show the economy expanding 6% in 2021. Finance Minister Roberto Gualtieri says he will likely present the autumn budget update, and that will be next week. And over in the U.S., no murder charges in the fatal shooting of Breonna Taylor. A Kentucky grand jury chose not to file the indictments against any of the police officers involved. A single officer was charged with wanton endangerment for firing into neighboring apartments. The decision has sparked outrage and renewed violence. At least 2 police officers have now been shot. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now let's get the latest on the U.S. election. President Trump has refused to commit to a peaceful transfer of power if Democrat Joe Biden wins the vote in November.
We have to see what happens. You know that I've been complaining very strongly about the ballots, and the ballots are a disaster.
I understand that, but people are rioting. Do you commit to making sure that there's a peaceful transfer of power?
We want to get rid of the ballots, and you'll have a very peaceful. There won't be a transfer, frankly. There'll be a continuation. The ballots are out of control. You know it. And you know who knows it better than anybody else? The Democrats know it better than anybody else.
Well, reporters asked Joe Biden for his response to Trump's comments last night.
I'm being facetious. I said, what country are we in? Look, he says the most irrational things. I don't know what to say about it, but it doesn't surprise me.
Meanwhile, Mitt Romney, the Republican senator from Utah, tweeted that fundamental to democracy is a peaceful transition of power. Without that, there is Belarus. Joining us now is Leslie Vinjamuri, head of the U.S. and the Americas program at Chatham House. Leslie, frankly, we've never really seen anything like it. Do people care when the president says things like this? Does it have an impact on the upcoming election?
Well, I think they do care. And remember that this president is always talking to multiple audiences. And in part, what he's been doing, and he's been doing it through the summer, he's been doing it for a very long time. If you read that article in The Atlantic last night, by the end of the summer, he was making 4 attacks a day on mail-in voting. So, you know, it's part of his effort to undercut the legitimacy of the presidential elections at an operational level. People care a lot. His base probably read that as a signal that the elections won't be authoritative or legitimate. And of course, it riles up the Democratic base, which is already, as we've seen for so many reasons, very passionate. You know, one thing you can say about this period of Donald Trump's presidency is that there has been a tremendous amount of political activism, more Americans registering to vote. And so there are some upsides for democracy, but you know, this is something that we have not seen before.
But so, Leslie, does it actually change, you know, the mind of people that are the undecided voters or does it just entrench his base? Like, if I'm in the U.S., in the Mideast, Midwest, and I read this, do I say, actually, he's gone too far because he's now putting in question the way our democracy operates? Or do I say, he's right, I'm going to vote for him because this is unfair?
I think if you're talking about independent voters and moderates in the United States, I think it persuades a lot of people that it's very important to vote. At a time, I remember the perception that the barriers to voting is much higher than it's been in past elections. And we're seeing, he's behind in the polls at a national level. Of course, we know that what matters is what happens in the states. Everybody, Francine, on election night is going to be waiting to see what happens in Florida. And we probably will know something about Florida on the night. The margin of victory for whichever of the two candidates will tell us a lot about what will happen subsequently. But the election could run for a very long time if it's close, which it looks like it may well be. So this is going to be a very contentious period. And by some scenarios, it could run for weeks. If there is a very clear defeat of President Trump and a resounding victory for Vice President Biden, I think that is a scenario in which we can anticipate a peaceful transition. I think anything short of that, and it could be very, very tricky.
We all know her name now, Breonna Taylor, a hospital worker that was shot multiple times at her home on March 13th, Leslie. There have been a number of protests after no officer was charged because of that death. How does that play out into the election?
Well, the Black Lives Matter protests have been taking place since the killing of George Floyd in May. They have continued. We haven't always had our spotlight on them in the global news media, but they have continued. It's been an unprecedented wave of violence with, trigger points. And this is a very significant one. People have worked very hard to make sure that we know it's not only George Floyd, it's Breonna Taylor, and it's numerous others across the United States. This is a very significant case. It has fueled, and it will continue to fuel protests now at a stronger rate. And it will really motivate, I think, a lot of progressives and Democratic voters. And of course, if there is violence, and remember that the vast majority of protests have been peaceful, there is a focus certainly on the right to highlight the violence. This is part of President Trump's effort to make part of his campaign about his ability to bring law and order to the streets. Of course, that's exactly what hasn't happened under this president, certainly not because of this president. He's stoked division, he's inspired violence, but this is going to certainly drive voter turnout. It's one of the top issues right now for the electorate. It's going to be discussed in the presidential debates next week. And it's very divisive. I think one real concern now is, the combination of the battle over the next Supreme Court justice, the battle over defunding the police and legislation makes it very hard to talk about getting anything constructive through this Congress before the presidential election. And of course, we know that fiscal stimulus is critical. We know that, a stopgap measure is critical, but polarization amongst the American electorate and partisanship in Congress has always been bad. It's much worse right now.
Yeah, I mean, it's a pretty, divided country at the moment, Leslie, and you mentioned there, the battle to get an appointment of someone to replace Justice Ruth Bader Ginsburg. Does any of this, again, sway polls? Like, does it sway someone who would have voted for Trump to now vote Biden, or vice versa?
I think the real question is less turnover. I mean, there are two questions. One is, how does it sway independent voters? I think most independent voters, we know, actually tend to already lean Republican or lean Democrat, so perhaps it inspires them to vote. It certainly energizes both Donald Trump's base, who really, and the conservatives in America more generally, who really care passionately about the appointment of Supreme Court justices. It mobilizes the progressives who are very angry that not only at the pace, remember Ruth Bader Ginsburg is only recognized yesterday, she'll be lying in state tomorrow. I mean, this is tremendously fast for a woman who's had such extraordinary influence over so many decades on America and on the question of equality under the law, equal protection under the law. So for so many reasons, it's problematic. But I think what the evidence actually shows us, the people who have really analyzed this, is that in the end, this does actually not change people's votes, and it doesn't actually drive voter turnout. If you look at it over an extended period of time, it doesn't actually change the vote. This election is different. Some of the lessons that we've drawn from previous elections might not be the same. We know that in the midterm elections in 2018, the fight over Brett Kavanaugh certainly mobilized and energized and increased the passion with which voters took when they voted. But there's a lot yet to come. And remember that Americans are sitting at home right now. They're working at home. We know this from our Zoom calls. Their dogs and their children are coming into the background. They're frustrated. They want to see America get back on its feet again. And so I think the pandemic will be the #1 issue that drives Americans when they turn up to the polls. What do they think of this president? And do they trust his ability to move the country forward? Or do they want Vice President Biden and his team to do that?
Leslie, what about the Republicans in this? I mean, because of the division, because of these very emotional, really, subjects that we just touched, are we going to see a splintering of the Republican Party, or any of them actually questioning whether Trump should be their candidate?
I mean, I think this, this has been the question. What has happened to the Republican Party, right? The party of dignity, of free trade, of internationalism, the party that just sort of ducked behind the president for most of these 4 years. We have a couple, on the question of the Supreme Court justice, we don't even have a candidate announced yet by the president. He's going to do that on Saturday. And already we have the votes in place for that, with a couple of exceptions, Susan Collins and Lisa Murkowski, who think that, that it should wait until after the election. Susan Collins even going so far as to say it should be the next president who chooses that Supreme Court justice. She's obviously in a very tight race. But there is this broader question of, will the Republicans, what will it take for the Republicans to stand up to a president that really simply hasn't represented their style of politics, and frequently not their policies? And if we got to a point where there was a contested election, would they stand up? One certainly hopes so.
Thank you so much, Leslie Vinjamuri, their head of the U.S. and the Americas program at Chatham House. Now, coming up, more from our exclusive interview with the Fed Vice Chair, Richard Clarida. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. JP Morgan is set to pay close to $1 billion to resolve U.S. market manipulation investigations. Sources told Bloomberg of the potential record settlement involving alleged spoofing. It could be announced as soon as this week. The accord would end probes by the Justice Department and industry regulators into whether metals and treasury traders rigged markets. Now, Westpac is paying a record fine of 1.3 billion Australian dollars to settle the nation's biggest breach of money laundering laws. It caps a saga that shredded the bank's reputation and cost its former chief executive his job. It's the largest fine levied against an Australian company. It is also more than the 900 million Aussie dollars Westpac put aside for the penalty. And California plans to ban new gasoline-powered cars by 2035 as part of the fight against climate change. Governor Gavin Newsom's announcement comes as the state is battling historic wildfires. He touted California's existing strength in electric vehicles, saying it accounts for about half of the nation's EV market. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, Jay Powell is pleading for more stimulus while highlighting the long road to economic recovery. During his second day testifying before a House panel, he pushed back against suggestions that the Fed favored markets over people during the pandemic. Now, in an exclusive conversation with Bloomberg, the Federal Reserve Vice Chair Richard Clarida agreed with Powell.
What we're saying quite simply is that perhaps in a normal recession, or perhaps if we were back in February, then obviously getting to 2% and moderately exceeding 2% would be within our forecast horizon. But because of the depth of the shock, the economy has to recover. And as I said, in our baseline, that recovery relative to the last downturn will occur within about three plus years. But until we get to that point, overshooting is just an academic point. And we actually want to get the economy to 2% inflation and maximum employment. And we think, along with fiscal support, that can happen.
Meanwhile, fund manager after fund manager has come on this show and said that we are at risk of creating an asset price bubble, if not having created it already. How does that factor into your calculus about when to tighten policy?
Well, that's a good question, and obviously financial stability is always, and certainly in the Powell Fed, an important consideration. We get regular briefings on financial stability. We issue a twice yearly report, so we're very attentive and attuned to that risk. But it's also important to remember, Lisa, we have a dual mandate assigned from Congress, which is maximum employment and price stability. If hypothetically we were to become concerned that financial stability put our maximum employment and price stability goals at risk, then we would have to factor that in. But Lisa, we also believe that monetary policy, raising or lowering rates, is a pretty blunt instrument, and our inclination and our preference at the Fed is to work with other agencies on regulation, supervision, bank liquidity, and other dimensions than simply raising or lowering rates to deal with financial stability.
I guess another way of asking this is, how effective can the Fed be without more fiscal support, without another round in Washington, D.C. that's substantial, that injects direct aid to companies, to individuals?
Well, as Chair Powell indicated, and we all believe, obviously fiscal policy is for the Congress and the executive branch. But when asked, what we'll say is we do think that additional fiscal support will likely be needed. I think it's very clear that the CARES Act, which passed in March, was really a historic government response to a historic crisis. A $3 trillion package provided significant support to the economy. The economy's made a lot of progress, Lisa. About 11 million jobs have returned, but there's still a deep hole. We still have a very high rate of unemployment. We have a lot of small and medium-sized businesses that are suffering. And so, yes, additional fiscal support will likely be needed.
Well, that was the Fed Vice Chair, Richard Clarida. Now, coming up, she rose to the top as part of the Bloomberg Equality Summit. I spoke to the Chief Executive of UK bank NatWest Group. Our interview with Alison Rose is next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, as part of the Bloomberg Equality Summit, we spoke to Alison Rose, the chief executive of NatWest Group, and asked her what she's doing to improve diversity at the bank.
We're very clear that we've set targets. I'm a great believer in if you don't measure it, it doesn't get done. So we have a very broad program around helping encourage women coming into banking, encouraging girls to think about banking. I have a program called Dream Bigger, which goes into schools and encourages girls to think about finance as a career, to think about entrepreneurship as a career, to work on resilience and really encourage more people into the pipeline. But we set targets at our top 4 levels. We have a fully diverse represented board. My executive team now is over 30% female, and we have targets at our CEO -4 level, right the way through the organization to encourage all elements of diversity and inclusivity. And all of my team are encouraged to embrace it, as well as broader elements of inclusivity. But I think you set targets, you put interventions in place, and you create a culture that hopefully will encourage people and allow that talent to thrive.
Why do you think not enough females actually join banking in the first place? Is it a cultural thing? Is it a perception? Is it seen as too aggressive?
I think historically, the financial sector has been very male dominated. When I started my career, I joined areas where I was the only woman in the room, and that was, for a long time part of the environment I operated in. So I think it sort of starts from having a perception of being like that. But the culture of banking has changed enormously. We need to do a better job of explaining the fact you can have, 1,000 different careers in one organization and what an exciting environment it is, and then create the culture that people can really be their whole selves when they come here. And increasingly seeing more women come into banking. What we need to do is now get more women through into executive positions so that they really can make a difference, so that you've got a really diverse workforce. I know certainly being part of diverse teams is fantastic because you get different perspectives, different challenge, different creativity, which makes you more competitive. So making sure we can really articulate the attraction of this industry, I think will encourage more women to join.
Do you ever get pushback with some of these initiatives or some of the things you're trying to do and change?
No, I mean, a lot of what I get when I've driven diverse debates and the cultural change, it is a ask for help from people. Why am I not attracting more women? Why do I have an inclusivity problem? How do we address this? And a lot of it is unconscious bias. You have to look at talent in a very different way rather than through the lens with which you would typically look at it. So generally, I don't get pushback. I get an ask for how can I get the best talent? How can I get help? And I think explaining the business case, explaining the imperative, this isn't a nice to do. This is an absolute business imperative. And so it's asking for help, asking for interventions.
Well, that was the NatWest Group Chief Executive Alison Rose speaking to us yesterday as part of the Bloomberg Equality Summit. Now let's take a look at some of the stories that we're watching out for today. Aviation industry leaders are coming together at the virtual World Aviation Festival as the sector faces unprecedented disruption. Now at 12 p.m. UK time, we'll also have quite a lot in terms of Turkey, because the Turkish Central Bank will announce its latest policy decision. It's expected to hold its benchmark rate at 8.25%. And then also this afternoon, the Chancellor Chancellor Rishi Sunak will give a statement on the UK economy and more measures to support, of course, the economy. In the US, we heard from the Fed officials after 2 days in front of the House Financial Services Committee. Jay Powell and Steve Mnuchin face the Senate Banking Committee to give their quarterly CARES Act report to Congress. In the meantime, this is what the market is looking at. So a lot of the focus is, of course, on the valuation that we had over the last couple of days. A lot of the focus is on what we heard from the UK, as we expect Rishi Sunak to announce more something to put in place to actually support the economy and some of the businesses because of what we know about the restrictions. So oil dropping below $40 a barrel. The stocks are falling. Officials warning in the U.S. from the Federal Reserve that more fiscal stimulus is needed to sustain the economic recovery. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Grim tidings, market slump as warnings from the Fed on the need for more stimulus ignite fresh jitters. Powell and Mnuchin take the center stage again today. President Trump refuses to commit to a peaceful transfer of power post-election. He's currently trailing Joe Biden in national polls. The election is in 40 days. And Rishi Sunak's winter economic plan is coming. The chancellor will set out new crisis plan to protect jobs today. Measures could include extending employee wage support. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lachman, London, Tom Keene in New York. Tom, it was pretty stunning to hear that from, of course, the Fed. That is, I guess, not supporting the markets because they worry about monetary policy. The second phase of central banks that we were talking about and what they can do on the fiscal front.
There's so much going on, it becomes a blur. You really wonder what is the cause, the effect, and maybe the re-cause as well. Francine, this fiscal question is front and center, and as we were talking yesterday across all of surveillance, the United Kingdom clearly out front of the debate versus what we see in the United States.
Yeah, we'll have plenty more on that throughout the day. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. No murder charges in the fatal shooting of Breonna Taylor. A Kentucky grand jury chose not to file the indictments against any of the police officers involved. A single officer was charged with wanton endangerment for firing into neighboring apartments. The decision has sparked outrage and renewed violence. At least 2 police officers have been shot. President Donald Trump says the Supreme Court will likely have to decide the outcome of the November election. He's arguing he needs to confirm a new justice to replace the late Ruth Bader Ginsburg to break any tie. He's casting doubt on the validity of the election, reiterating his criticism of mail-in voting. And the UK is considering its first vaccine studies that would deliberately expose healthy people to the virus. The idea of so-called challenge trials has gained momentum recently, and a growing number of volunteers have signed up to take part. This type of study can speed up research, but raises ethical questions about exposing people to a potentially fatal virus. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities. I'm going to try to go through this really quickly. We are at a correction stage in the Standard & Poor's 500, 3221. You can round it to 10% if you choose. To find support here today is critical. Yields do nothing. We knew that coming in. Oil is an indicator of that stronger dollar, and really what we see in the data check is expressed in foreign exchange with DXY out to 94.40. Francine, if there's one thing that's changed suddenly in 4 days, EM gives way, and it really can look at any emerging markets that give way. We focused on Turkish lira with the important bank meeting happening, I believe, momentarily. 7.71 is new weakness on Turkish lira, but I'll tell you, Francine, it's amazing to see EM join the developed nations in weakness against a strong dollar.
Yes, and also there's a Turkey, decision later today, Tom. So I know you've been watching a Turkish lira very closely, so don't forget that. And we'll bring it, of course, to you as it breaks. What I'm looking at is a very similar data check to yours. Stocks are falling. If you look at futures, so they're down. This has to do, Tom, with what we heard from the Fed and the warning of more fiscal stimulus being needed, and then crude oil dropping below $40 a barrel. There you go. That's exactly what we should be looking at. Now, let's get the latest on the U.S. presidential election. President Trump has refused to commit to a peaceful transfer of power if Democrat Joe Biden wins the vote in November. Now, Trump has criticized the legitimacy of mail-in voting. Here is President Trump and Joe Biden's response after speaking to reporters last night.
We're going to have to see what happens. You know that I've been complaining very strongly about the ballots, and the ballots are a disaster.
I understand that, but people are rioting. Do you commit to making sure that there's a peaceful transfer of power?
We want to get rid of the ballots, and you'll have a very peaceful. There won't be a transfer, frankly. There'll be a continuation. The ballots are out of control. You know it, and you know who knows it better than anybody else? The Democrats know it better than anybody else.
What country are we in? Being facetious, I said, what country are we in? Look, he says the most irrational things. I don't know what to say about it, but it does surprise me.
Well, joining us now is Elliot Hentoff, State Street Global Advisors Head of Policy Research. Elliot, thank you for joining us. Who does this play to? So this is President Trump saying that basically if he doesn't win, it's rigged and there won't be a smooth transition of power. We've never really seen anything like it in modern U.S. history. Does it energize his base, or does it actually convince the undecided to vote for Biden?
First of all, we've never seen it in U.S. history, but we've seen it in emerging markets. So I do think we have a long, deep expertise in knowing how emerging markets fare in this. And now, mind you, this is not an electoral play. This is not, the idea is not to change public opinion, shift voting patterns. The idea is to lay the groundwork for the post-election day strategy. Bear in mind, Trump has had the most stable approval ratings in U.S. polling history. Low, but still incredibly stable. And so this is not about winning new voters or swaying independents, if at all.
Okay, ladies and gentlemen, I just purchased euro at 116.574. So I placed an order and it was executed at 116.574. Okay. Let's see what's going to happen.
Will it be on the markets in the coming days, in the days after the election?
Well, we've been flagging the U.S. election as the major macro risk this year, and then of course we had a global pandemic, so that it paled in comparison to the coronavirus. And frankly, for good reason, the pandemic has been dominating market thinking. I think it was interesting, you talked about the recent market reversal in the past few days, and we're still seeing this very traditional risk-off pattern. You know, EM sells off, equities go down, yields stay kind of flat, the dollar rises. That pattern is unlikely to replicate itself in November if you get a protracted dispute. And again, a dispute, what matters is a dispute where markets really are spooked in the belief that there will not be certainty by early December, mid-December, or come January. And basically, the range of scenarios remains wide open. It's that wide uncertainty as to how a dispute would play out. That's what would spook markets. It's fine if there's a few days of back and forth and it's not fully clear. Markets can tolerate that. But I'd say about 5 to 7 days in, if the end game is not predictable by markets, then you'll start to see some not only high volatility, but some real risk-off pattern. But in reverse, the dollar would actually decline in parallel. So a very unusual market phenomenon awaits us.
Elliot, you know, absolutely fascinating, and I really take issue, not from you, but from the punditry, that this hasn't been seen before. Anybody who studies the election of 1800, the shift from Adams to Jefferson, will see a lot of parallels. Forget about the politics, Elliot. To me, there's the idea of American slowdown, which we're hearing conversation to conversation. Do you just impute in a massive fiscal program, whether it's President Biden or President Trump, in February or March of next year?
Yes, I think that has to be your market assumption. And frankly, if you look where we are, you said it's a correction, but we're a correction 10% off of all-time high. So I think I'm comfortable with market valuations. And yes, there's not going to be a stimulus now. That stimulus is going to lack us. We're going to miss it in the recovery in the coming months. The data will be weaker. Whatever president can establish himself in January going forward, there will be a support program to substitute for the missing stimulus in 2020. There will be one front-loaded. I mean, by the way, remember, it will be retroactive. So some of it, you know, if households and businesses dip into savings now, some of that will be replenished by that stimulus bill come February.
So how do you fold that into market analysis, as Francine meant? I mean, what do you do now in a market in correction?
Well, I think as long as you have confidence that the U.S. election will pass as a macro risk, the rest of the fundamentals point towards a light overweight with risk assets. Nonetheless, both in equities and elsewhere, because you have the macro recovery, you have the vaccine development, and a few other fundamentals that are moving in the right direction, more in the right direction than in the wrong direction. Right now, it's politics moving the opposite direction, but the rest of the drivers point upwards.
Elliot, thanks so much. Elliot Hentoff there, State Street Global Advisors, Head of Policy Research. Now, coming up, we'll be talking about the economy, the scarring, and some of, well, what we're seeing across the world with Janet Henry, HSBC Global Chief Economist. She's coming up next, and this is Bloomberg.
Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
We're not going to even begin to think about lifting off, we expect, until we actually get observed inflation and we measure it on a year-over-year basis equal to 2%. Also, we want our labor market indicators to be consistent with maximum employment in the labor market. And so we've been very clear about that. If you will, that's the whites of their eyes. We want to see actual inflation at 2%. About 11 million jobs have returned, but there's still a deep hole. We still have a very high rate of unemployment. We have a lot of small and medium-sized businesses that are suffering. And so, yes, additional fiscal support will likely be needed.
Richard Clarida there, the vice chairman of the Fed, and I really want to go thank Megan Green of Harvard Kennedy School for the phrase, the whites of their eyes. This is a really interesting idea of when we will see inflation. Buried in that comments was the American labor economy. Now joining us, Janet Henry of HSBC, their global chief economist. She and her team write piercing essays on these dynamics. On this Thursday, Janet, with jobless claims coming up, I want to go to the HSBC determination of the millions of unemployed that are out there. Is it a depression unemployed within this pandemic?
No, we're certainly not forecasting a depression because the policy stimulus that came through has so far successfully avoided a depression. Already, it seems very clear we've seen a strong bounce back in growth in the third quarter. It's just that we now know things are already starting to slow down. So it's still a very deep recession and we're still a very long way from a solid recovery.
But to the uncountable millions of unemployed, John Farrow has talked about the unemployment statistics of the United Kingdom. But I would suggest in the HSBC world, there's a real question about the employment dynamics that the Fed and other banks have to deal with. What's the level of grim that they are?
Well, the difficulty we have with the data, you're right, we know there are millions unemployed, but the unemployment stats are everywhere. You know, we're focusing on weekly jobless claims in a way that we never have in the past, even though we know there are loads of distortions. In Europe, you can't even see the numbers because when people are temporarily unemployed, they're counted as employed. It looks like unemployment rates haven't actually risen. In the US, the unemployment rate shot up. So we know that there is a lot of excess labor, and that's why we keep hearing all of these calls for much more fiscal stimulus to support labor incomes to prevent an ongoing implosion in the economy so that a certain level of demand can hold up and gradually demand for some of these jobs starts to return.
Janet, what do you worry about the most? I mean, we see in a lot of European places extra restrictions, the number of infected going up. Does that hit consumption first, or does it go to bankruptcies directly?
Well, initially, it tends to hit growth You know, we talk about the pandemic and the impact of it, but actually the hits to GDP, the huge one that we saw in the second quarter, was much more about the degree of government restrictions that were put in place. People, in some cases, couldn't consume certain goods and services, even if they actually wanted to. And now the second round that we're seeing in some countries, the rising cases, the renewed localized lockdowns, that will impact on activity. And based on the PMI services that we've seen for August and now September yesterday from the Eurozone, there's signs that both the mandatory social distancing that's returning, but also some voluntary reactions by consumers is already starting to hit the service sector again. But it's different in the emerging economies. 90,000 new cases a day in India, and they're still reopening the Taj Mahal.
When should we worry about debt?
We always worry about debt. You've got to remember I'm an economist. So it's at some point, especially in the emerging economies already, you know, there is going to be renewed concern, especially as growth slows down, about the risk of capital outflows, especially some emerging economies that have a dependence on short-term flows and have large external financing requirements. Even in advanced economies, we need to worry about the level of debt. When the level of debt is high, there is still a desire to pay down that debt rather than to invest. For consumers, a desire to keep savings rates high and to pay down debt, those that are fortunate enough to still be employed. But as I see, you know, we've seen from behavior of other countries already, the tax rises can wait. You know, it was floated just a couple of months ago that the UK tax rises would be on the way. There's discussion of wealth taxes in Canada, but instead in the UK, we're not going to have an autumn budget, and we're going to have an extension of some of these schemes. There isn't time yet in the advanced economies to address what we know is a large and growing debt problem.
Janet, give us an update on the unique HSBC experience of China. I mean, the advanced economies, as you put it, rely on that marginal dynamic with China. How's it going?
The Chinese recovery is continuing to come through. You've got to remember the Chinese stimulus has been very different to what we've seen in the advanced economies, which have been aimed much more at supporting workers and household incomes. In China, the policy has been more about keeping credit going and directing a lot of the investment into the fixed investment and infrastructure investment in particular. Also in China, because they were first into the pandemic and first out to a large degree, they were able to get the production side of the economy back on stream and benefit from the increased demand for some of those things that we needed during lockdown in particular, whether it's PPE or indeed home computers so that we can all continue to work from home. So the Chinese recovery is on track. And more than some of the other advanced economies, they've got an eye on financial stability. So we may not get the huge fiscal stimulus that the rest of the world always tends to hope for from China. They've done enough for now.
Well, then that said, what is your trade dynamic? I mean, off the core equation to the United States, when you sum exports and imports, what is that dynamic right now? Is it diminished world trade and a weight to overall GDP, or can we be more optimistic?
China still will provide more of a lift to global demand and global trade than most countries, any other country. US, both exports and imports, tend to run in line with global trade. But obviously it does matter. It's still the largest economy in the world. And I think that's what we're seeing in markets at the moment, isn't it? You know, this risk-off move, partly, not just the rising cases, but because the US fiscal stimulus is delayed. If we don't get that US fiscal stimulus, then growth, which is already, I think, going to be slower in the fourth quarter, quite significantly so, without a fiscal stimulus, it would likely be even slower. That will hit demand elsewhere in the world.
Janet, thank you so much. Janet Henry there of HSBC, of course, stays with us. Now, don't miss some of our big interviews ahead. Bloomberg's Guy Johnson will be speaking exclusively with airline senior executives of EasyJet, JetBlue, Lufthansa, United Continental at the World's Aviation Festival. This comes as the outlook for airlines is turning increasingly grim, with new restrictions dashing hopes for a recovery. That's throughout the day. This is Bloomberg.
presidential candidates enter the final stretch before the election, both are pitching their diplomatic experience, but with contrasting plans. Diplomats, ambassadors, and experts weigh in on the future of U.S. foreign policy on a Bloomberg special report, 2020 Year of Crisis, Diplomatic Divide, on Bloomberg Television.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Wells Fargo CEO has apologized over comments that the struggle to find experienced black executives was partly down to a limited talent pool. Charlie Scharf initially said they were misinterpreted before issuing an apology, saying they were insensitive and showed unconscious bias. And JP Morgan is set to pay close to $1 billion to resolve U.S. market manipulation investigations. Sources told Bloomberg of the potential record settlement involving alleged spoofing. It could be announced as soon as this week. The accord would end probes by the Justice Department and industry regulators into whether metals and treasuries traders rigged markets. And that is your latest Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, this is what we're looking at in the market. It's a bit of a downward session, certainly when futures, and when you're looking at futures in some of the European stocks now. Some of them, I guess, are looking at valuations, but much more than that, they're really looking at what we heard from Jay Powell of the Fed yesterday, warning that more fiscal stimulus is needed to sustain the economic recovery, and that also came out in Tom's fantastic interview with Richard Clarida, of course, Vice President of the Fed. What I'm looking at as well is a bit of, gold is a bit depressed, and you can see oil holding below $40 a barrel in New York, Tom.
Yeah, well, let's make clear the fantastic interview was because of Lisa Bramwitz. She was so rude to ask him not once, twice, three times about fiscal policy. And of course, the vice chairman was very clear there about the need for fiscal policy. What we've got right now in the data, and I really want to emphasize this, is the deepest of the markets. The foreign exchange market tells so much, and with Janet Henry just with us, what David Bloom has done at HSBC on a resilient U.S. dollar, certainly not weaker dollar, rings true at least this morning. DXY, that big country index, ex-EM and ex-China, 94.42 really gets your attention, with the euro well under 117. Sterling with a little rally off the shock of Prime Minister Johnson's comments. I really want to focus on the deterioration of EM, whether you look at Brazilian real, Mexican peso, and certainly a beleaguered Turkish lira. 7.71 on Turkish lira is extraordinary. In the next hour, Ned Phelps of Colombia, he is fired up. This is Bloomberg. Good morning.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en unas
en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas.
Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración.
Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo.
Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Janet Henry of HSBC. Janet, we were talking a bit about what the Fed had said, what we had talked about in terms of stimulus, and of course some of the dollar dynamics going into this. Janet, you were also talking, of course, about India and the number of cases rising, but the Taj Mahal being open, which is a story that I'd actually missed. How much do you worry about emerging markets right now?
I always tend to, worry in a world if we are turning risk off. Because any emerging market that has an external deficit that is reliant on capital flows to finance that deficit, particularly if they have any kind of high inflation experience in the past, or where they are embarking on any kind of unusual policy mix, those are always the countries that are going to be a little bit more vulnerable. But I also know that emerging markets are where the growth opportunities are. And even in this extraordinary world that we're in, we still have higher growth forecasts for the emerging markets than we do for the advanced economies.
Does China become the real winner in this because they got out of the virus much early? They seem to have a handle on it. And so the economy can be on a much stronger footing more quickly.
It certainly is coming out of the recovery, more strongly than some of the other advanced economies. But the difficulty we have at the moment is that when we're thinking about different countries, it's different factors that have been driving the story. In some cases, the extent of the contraction that happened in any country was much more a reflection of the degree of government measures that were put in place. How much was activity restricted? Then how quickly the reopening actually came through, rather than the level of cases per se. But what we saw in China was a really draconian lockdown in the first quarter, an intense contraction in GDP, but then as it was spreading to the rest of the world, and the rest of the world was in lockdowns in the second quarter, China was starting to come back. Industrial production in particular, and they were producing these goods that the rest of the world were demanding. Incomes were still hit because the policy stimulus did not support labor incomes in the same way that it has impacted from the fiscal stimulus in the advanced economies. But now with the private investment starting to improve, but more importantly, public infrastructure spending has been quite strong, we've seen a broader part of the economy start to recover. So yes, on our numbers, China does have the best growth picture in 2020 and actually in 2021 as well.
Jen and Henry, I want to redux back to the Clarida comments yesterday, and particularly his exceptionally important speech August 31st at the Peterson Institute with Adam Posen. And Janet, what is so foundational here is a desire of the United Kingdom and the United States to not visit negative rates. I see Switzerland today with all of their challenges, 30-year paper, negative 0.30 as well. Is the reason we are so reticent about negative rates because of our predominance of money market funds within our system?
Yes, that is part of it, but also it's when you look back, it's very, very hard to find an example of any economy that's ever gone into negative interest rates that's come out of it. In fact, the only one I could think of is the Riksbank. And theirs was for entirely different reasons because they plan to implement, a digital currency. So I think, when we look at certainly in our outlook for the next couple of years, of course, the Bank of England has talked about the possibilities so much, although the latest speech from the governor suggested they're in no hurry. It's something, if it happens, would be more likely to come through later. We still are not forecasting negative rates from the US or the UK because of the reasons you mentioned, and also because you don't believe the banking system's in a position to handle them. But in New Zealand, we think you could get negative rates.
Janet, I want to show a headline right now, folks. It's very, very important. And what's important here is the statistic around it. The European Central Bank is handing over 174.5 billion euros in new rounds of long-term loans. This number has been widely anticipated, whether it would be 50 billion or 174 billion or 200 billion, et cetera. Bloomberg out under Paul Gordon's watch with a superb story today. Janet, what is missing in the supply dynamics of giving out many billions of dollars of loans to Europe under these targeted loans is the demand for loans. You can see, folks, the euro moving sharply or weaker. The demand for loans, Janet, is it there?
It would appear not at this point in time. Yeah. It is not. But I think you raise a good point, Tom. It's, we talk about demand and supply. We always talk about in the inflation context, which is going to be worse. Could we get inflation or is it going to be deflationary? The measures being put in place are all about the supply side. It's keep people in jobs, keep companies in business, keep the supply side going. The demand, whether it's now consumer demand, especially for services, is just not there. And actually demand for funds, yes, companies have all issued vast amounts of paper so far this year, but as cash reserves at the moment, on a broad basis, demand for funds, certainly for investment spending, I don't believe is there until there's much more clarity about the outlook.
But Janet, is there a danger that actually we're spending money to prop up companies that won't survive anyway, or that, we're not healthy companies?
Well, yes, of course there is, because in any one year, there's always tens, if not hundreds of thousands of companies that don't quite make it, that go bankrupt. It's just that when you're in the midst of a global pandemic, it's not easy for governments or indeed for financial institutions to try to pick winners and losers, because if you did get a transformation on the medical front, then some companies that were not viable suddenly become viable again. It's hard to differentiate those from the ones that went into this pandemic from a much more vulnerable position. So they can't keep them all alive forever. But at this point, when the recovery is still so fragile, where we've seen the best of the upturn, and it's already starting to falter to some degree, it's quite difficult to take those really hard decisions that may actually raise unemployment even further or accelerate the rise in unemployment that's still coming through in Europe. The most likely thing is that we wait for some time.
Janet Henry, thank you so much. Really appreciate it. HSBC, just really sharp there today, folks, on many of these themes that are addressed here in a middle and late September as well. Very quickly, Francine, it's real simple. Euro moves against dollar. Critically, it doesn't move that much against sterling. Sterling's got its own challenges, as you know, but a euro here, a 116.38 is a breakdown to new euro weakness. I looked across to Eastern Europe, Francine, and I don't see any dynamic there. This is very much a euro and a dollar story. There's a nice chart. It's amazing, Francine, how our team can dazzle with these intraday charts. It's just excellent. It just brings you to tears.
Yeah, it does bring us to tears. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom. TikTok owner ByteDance is asking a federal judge to stop President Donald Trump from banning the video app, removing it from U.S. app stores this weekend. It comes as Beijing is threatening to kill off a deal over what state media calls dirty tactics and an American trap. Who will own what in a new global TikTok is still a contentious issue. Japan's new Prime Minister, Yoshihide Suga, held his first phone call with his South Korean counterpart since taking office. Suga told President Moon Jae-in that the neighbors should work to resolve their strained relations. The talks proposed by South Korea were the first contact in 9 months between leaders of the two countries. Relations between Japan and South Korea deteriorated to their worst levels in years under Suga's predecessor, Shinzo Abe. And Fed officials are reiterating the need for more fiscal stimulus, saying it's critical for sustaining the economic recovery. But there is pessimism. Congress can quickly deliver on a new aid package. Chicago Fed President Charles Evans is concerned it won't be forthcoming, and his Boston counterpart, Eric Rosengren, thinks it may not happen until next year. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
All right, Ritika, thanks so much. On the correction curve, it is a good time to speak to someone with decades of experience. We do that later today. David Costin joining us with Goldman Sachs here on, it's a normal correction. There's no need to panic. It's fine. The VIX 28.99. What else do you need to know? David Costin, later. Must watch, must listen. This is Bloomberg. Good morning.
You don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Good morning, everyone. Bloomberg Surveillance. Francine Laquan, Tom Keene. Important headlines out of the Euro on further assistance. The supply of money coming into the system extraordinary at 174 billion euros, and we'll see where that goes. Euro weaker on the news, 116.38. One of the phrases here, and this comes from the 20th century, like the 1930s, I should say, is pushing on a string. Joining us now, our chief pushing on a string correspondent, Marcus Ashworth, joins us, of course, writing brilliantly across markets and economics for Bloomberg Opinion. Marcus, the whole thing feels to me like pushing on a string is institutions and authorities stumble in a pandemic into the fourth quarter of 2020. What will greet them? What does the Q4 of the Marcus Ashworth world look like?
Well, unfortunately, confusion in the context that I doubt many corporates, or as many corporates as, for instance, the UK government would like, will pay attention to this work from home ruling this time around. I think the momentum is just starting to build up to that sort of 25, 30% of staff coming back in. There's new problems with new graduates coming in at this time of year. How do you inculcate them into the culture? How do you keep the culture going? You know, everything's worked brilliantly as far as working from home with technology and Zoom and all the other manner of compliance issues seem to have worked effectively from all the disaster recovery planning that the banks have done. However, there's a limit to keeping your business momentum going and how you compensate people or reward people.
The model here was there was a bridge and we were supposed to ignore everything, waltz over the bridge, and the bridge was out there somewhere. Where's the end of the bridge for Marcus Ashworth?
Well, I think this certain sort of going back to sort of lockdown-like procedures is going to be very difficult this time around. And I really think that to take the momentum out of the economy, I think the UK economy will probably go close to 20% in the third quarter, and that'll go straight back to zero in the fourth quarter if this continues at this pace. I do not want to see this carrying on to the first quarter. No one does, and I think that's where we have a real issue whereby some scarring will be done on a permanent basis if we don't try and keep the economic momentum, particularly in cities and towns, which is what's going to feel at the worst here.
Marcus, what is the market looking at right now? I guess there was a shift in tone from market participants that, you know, we've gone from expecting a recovery from really questioning the basic assumptions of this recovery that had underpinned the rally in the last couple of months.
Yeah, I think that's very important to look at, particularly in euro. The euro has benefited hugely from the perception that Europe was performing better throughout the crisis than the States. That is no longer the case. That doesn't mean the US is doing great. It just means that the difference between Europe is no longer quite so obvious, and consequently, that's why we're seeing a weaker euro. Good news for the European Central Bank at the moment, it's trying to jaw it down. But really, this is all about dollar strength. Why do we have dollar strength? This is not good news dollar strength. This is a little bit of panic, a little bit of protection, a little bit of go back to liquidity.
Francine, that's why I love having Marcus on. I'm going to steal that phrase. I'm going to beat that phrase to death for the next week. This is not a good news dollar.
With royalties, Tom.
Yeah,
Marcus,
absolutely.
what do you do with, you know, some of the havens? I'm thinking of Swiss franc. I'm thinking of yen. I mean, how difficult will it be, for example, for the Swiss National Bank to try and defend this currency?
Exactly right. How on earth do they keep it down? I wonder. I worry.
I guess we've got some problems there with Marcus Ashworth. We've got some audio problems right now, some challenges there. But good perspective there. Ashworth driving the dollar index up to 94.54 right now. I got to get the chart out and see where that level is on DXY. And again, euro off that European news weaker, 116.36 on the euro. This is an important conversation with the governor of the Central Bank of Norway. We're going to do that here next. Important, timely conversation. They leave rates unchanged. Futures -7. This is Bloomberg. Good morning.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Norway's central bank surprised markets today when it ruled any increase in rates for years to come. It ruled out, rather, any increase in rates for years to come. Now, economists had speculated that Norges Bank might bring forward its plan, possibly even to next year. Well, joining us now for his first broadcast interview of the day is Øystein Olsen. He's a Norges Bank governor. Governor, thank you so much for giving us your time. I know it's a very busy day, but do you really think that actually, given what you've said today, that you're kind of diverging, you see things a bit differently to other, major central banks?
Well, I think that just now there are not that many differences. I mean, we had, if you go back to March, then you had a different situation. We had a policy rate at 1.5, but given the pandemic that hit us all during the winter and spring, we are now. Most of us are now close to zero. And for our part, we have, in addition, undertaken a number of, well, let's call them unconventional measures linked to monetary policy that we haven't applied for quite some time.
Talk to me a little bit about inflation. We have a very transparent
policy as well, monetary policy as well now.
Yeah. Governor, talk to me a bit about inflation. Would you be inclined, like the Fed, for inflation to overshoot? Would you be comfortable with that?
Well, with reference to the new strategy of the Fed, one brief interpretation of that is that it reflects the Fed's strengthened view of having a flexible inflation targeting system with a dual mandate, with sufficient attention to the real economy and to the unemployment level. We have our mandate and our own version of what you can call flexible inflation targeting, and with sufficient focus on the same, namely the real economy. And we have been for some time quite relatively flexible with respect to achieving a specific number for the inflation.
Governor Tom Keene in New York. Good morning, sir. Thank you so much for joining us. Is dollar strength intrusive upon you? If we see a persistent resilience in the dollar, does that limit the Norwegian toolkit?
Hard question. We're small. Norway's a small open economy, and when the dollar moves, our currency and many other currencies move as well. As you know, we have seen even the last days a new round of a weaker Norwegian krone. But I think there's no drama. It's nothing similar to the situation we experienced and handled back in March, where we had to intervene for the first time since the late 1990s. In our view, now that even the currency market functions quite well, close to normal, and we are in a very different situation.
When I look at the advantages of Norway, and we all understand hydrocarbons and such, you have your own fiscal calculus. Tell us about the fiscal pressure you face given the surge, a relative surge in unemployment out near 5%. I mean, are you the last nation? You would think so, but are you under fiscal pressure?
As a central bank?
As a central bank and as a nation?
Not at, well, as a central bank, there's no pressure from any authority to sort of coming closer to what you can call contributing to fiscal policy. And as you know, our fiscal situation as a nation is very special. We have abundant reserves, and this room of maneuver in fiscal policy has been exploited and in this very difficult situation we are all into these days with the pandemic. So yes, fiscal policy has been quite expansionary, but unlike many other countries, we have assets, huge financial assets to back that. But this is not our responsibility, of course.
Yeah, Governor, when you look at some of the imbalances that maybe we observe because of ultra-low rates for longer, is there anything that we're underappreciating? Is there anything that you worry about that we're not looking at yet?
Oh yeah, there are always things to worry about from our point of view. I mean, we are in an extreme situation. I think we all worry about the pandemic and how that develops. And science and developments in most countries, including our own, has been quite worrying since the summer. So that's the main uncertainty. But then this has led to a historically sharp downturn in our economy as well, like in many other countries, and that has been handled by fiscal policy and also to some extent monetary policy, which in our case has contributed to fight the downturn. But yes, there are always more specific worries as well. One specific area which we mentioned in our recent report is we are so far we're quite happy that we have prevented in this situation a downturn in the housing market. So housing prices have been the rise. Housing prices have been somewhat stronger than we anticipated in the summer. But that is a worry, of course, if that growth continues, fueled by very low interest rates, and that also could fuel again a rise in debt by households. So that is an area which we have a focus on. But so far, we are relatively pleased with the development in our economy.
Governor, thank you so much for joining us. We really appreciate this visit each time the Norwegian Central Bank speaks. Governor Olsen, of course, of the Norway Central Bank. Much to talk about here, and it would be important to talk in the short-term space. In the fixed income market, the stereotype is it's asleep. It's not. 90-day LIBOR down to record lows in the last 48 hours. In our next hour, we lead with Tony Crescenzi of PIMCO. Stay with us. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate and ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
This morning, the stock market at the point of correction. Can equities find a bid? Bonds becalmed. Is there anyone who does not want the dollar stronger? Suddenly, emerging market currencies, they are weaker. The Turkish lira, just flat out grim. This morning, newly unemployed claims, and Michael McKee, he will explain that with double and even triple counting, we really don't know how many millions are unemployed. And with 40 days to the election, 5 days to the ignored debate, Biden and Trump and Biden, they battle in the battleground states. Good morning, everyone. This is Bloomberg Surveillance. From New York, Francine Lacroix in London. I'm gasping here over some of the desperations, Francine, we see out there. Now, the Chancellor of the Exchequer is going to wander out with something all of America desires. Tell us, Francine, what his goal is this morning.
Well, the Chancellor, Tom, will have to actually lay out how he's going to support this economy. So it was, just a couple of days ago where we had these new restrictions from Boris Johnson saying that actually these restrictions, i.e. pubs and restaurants closing sooner, limiting the number of people that can see each other, could last 6 months. Now, that could do huge damage to the economy. And so the Chancellor on the back of it decided to scrap what he was going to present to try and give, a bit more support to the economy, whilst also keeping in mind the debt. Because if you look at guilt levels, Tom, it's not that simple.
Yeah, it's not that simple. And, of course, the battle here of too many economies to avoid negative interest rates. Tony Cosenzi with us in moments. First, though, your first word news in New York City is Ritika Gupta.
Morning, Tom. Francine. No murder charges in the fatal shooting of Breonna Taylor. A Kentucky grand jury chose not to file the indictments against any of the police officers involved. A single officer was charged with wanton endangerment for firing into neighboring apartments. The decision has sparked outrage and renewed violence. At least 2 police officers have been shot. President Donald Trump says that the Supreme Court will likely have to decide the outcome of the November election. He's arguing he needs to confirm a new justice to replace the late Ruth Bader Ginsburg to break any tie. He's casting doubt on the validity of the election, reiterating his criticism of mail-in voting. The UK is considering its first vaccine studies that would deliberately expose healthy people to the virus. The idea of so-called challenge trials has gained momentum recently, and a growing number of volunteers have signed up to take part. This type of study can speed up research, but raises ethical questions about exposing people to a potentially fatal virus. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities, red and green on the screen right now. The VIX pretty much flat, 28.76 after the carnage yesterday. SPX, I'm going to calculate 9.9%. I'm going to call that a correction. We are there this morning. Bond market calm. Tony Cosenzi is going to explain it all to us. I'm bored. Let me move on here to oil. Dollar infected 39.91 on oil. Gold 18.56 the ounce. Really hammered. Francine, I bought gold right at the top. I don't know what else to say. It was an entry-level position. Foreign exchange really gets my attention off the euro announcement moments ago. A new breakdown in euro 116.44. Turkish lira 7.70 is not pretty. Francine?
Tom, was it gold or gold necklaces? We need to get to the bottom of that. Stocks are falling. They're falling in Europe. They're falling if you look at U.S. futures. And this is after Fed officials warned that more stimulus is needed to sustain the economic recovery. And so that's also giving a lot of food for thought for a lot of investors here in Europe. Treasuries picking up, dollar gaining, and then oil, Tom, also holding below $40 a barrel in New York.
Very good. It was most interesting yesterday in that we had an exquisite moment with the vice chairman of the Federal Reserve System. Our team in Bloomberg Economics really prepared us for this, Michael McKee as well. And I thought it was great. Lisa Abramowitz nailed the fiscal issues. John Farrow nailed the more short-term issues. And I tried to crowbar out of the vice chairman further vision on what we do at 2% inflation. Let's listen.
We're not going to even begin to think about lifting off, we expect, until we actually get observed inflation and we measure it on a year-over-year basis equal to 2%. Also, we want our labor market indicators to be consistent with maximum employment in the labor market. And so we've been very clear about that. If you will, that's the whites of their eyes. We want to see actual inflation at 2%. About 11 million jobs have returned, but there's still a deep hole. We still have a very high rate of unemployment. We have a lot of small and medium-sized businesses that are suffering. And so, yes, additional fiscal support will likely be needed.
Richard Clarett of Columbia University, he is the vice chairman of the Federal Reserve System. Right now, someone who worked with Richard Clarett at Pacific Investment Management Company, Tony Crescenzi, joins us. He is expert on the short-term market and also expert on recapitulating here, Tony, what Clarett and you wrought in 2014, the new neutral. What is the new neutral in 2020?
Thanks for having me, Tom, first of all. The new neutral in 2020 is probably lower than it has been historically. We at PIMCO said in 2014 that the neutral rate, meaning where it is that the Fed's neither stimulating the economy or trying to knock it down and make it weaker, is probably between 0 and 1% real, meaning between 0 and 1 percentage point above the inflation rate. We think it's probably moved lower, but it's, and in potential, of course, in a recession, or even in the immediate aftermath, it's probably negative. In other words, it's better to have a policy rate that is below the inflation rate, as it is now, than it would be to have it above the inflation rate. So at the current time, it's lower. When looking out several years, it probably has moved away from that far end of that 1% range, closer to 0. But we'll see what the fiscal authority does, because that's in the end, as Rich Clarett has said, what's important and needed at the moment, because fiscal monetary policy can't do it all as much as it has crossed the Rubicon of late.
You know, Tony, I look at the Rubicon, and there it is, a headline, Tony, from you and me in 2008 when we were dazzling with LIBOR OIS. Well, maybe it's not LIBOR OIS, but it is a signal from the 90-day space of record low yields. Does that signal a vector to negative interest rates? What does it signal to see short-term paper that moldy?
It signals a long period of monetary accommodation, for one, and it also signals the likelihood in the market size that the Fed will do all it can to keep the carrot out there, to keep investors interested in owning bonds, just as the Bank of Japan, the European Central Bank, has with negative interest rates, by keeping the prospect of something more alive. And what is the something more? It could be an extension of the weighted average maturity of the current bond purchases of $120 billion per month. The current average maturity is around 5 or 6 years. During the last set of quantitative easing, it was double that. Keeping that prospect alive keeps the prospect of low interest rates alive. And finally, if the Fed really wanted to get radical, we would not put this in the base case in any way whatsoever. You could offer the idea of introducing a digital currency and extraordinarily low negative interest rates, because a negative interest rate, when it occurs, has negative connotation for banks. It costs banks 3 basis points per month, about 35 basis points a year, to have cash sent to them and to store it. And so there's an immediate cost of it. And individuals decide, well, let me hold cash. I don't want a negative interest rate in my bank account, so I'm going to hold cash. That arbitrage is what prevents it from being effective, along with the cost factor I mentioned and other factors that affect the money market. And so the dangling the negative rate, the digital currency idea out there would allow the central bank to do more, because it wouldn't have to worry about the physical side of the equation. Again, not highly improbable, but the broader point is the idea of dangling the carrot to keep fixed income investors interested at these low yields.
Right. But so, Tony, so what does it mean for this? Would you call this a second phase for central banks? Do they need to, to keep bond investors interested, but also just the economy steady? How much more creative do they need to get?
Well, there has been a lot of mission creep. You see in the Network for Greening of the Financial System, for example, an effort to aid the climate. Certainly a very good idea. In fact, central banks believe it in their purview to be looking at the transition and event risks, the two main risks related to climate change that could affect financial institutions and hence affect the economy. What central banks can do most, and more importantly now, is to help the fiscal authorities continue crossing the Rubicon and help finance fiscal deficits. And so, as Rich Clariter, my former colleagues, said, more is needed, and perhaps more, especially for small businesses. The Fed's own Main Street lending program didn't really get off the ground. It could do a lot more there, and perhaps it could move to activate that facility and others if it had to. And also, finally, keep in mind, it didn't buy many corporate bonds when it said it would buy many hundreds of billions. Its main program is only about $12 billion in size when it was supposed to approach $1 trillion. It's a backstop for now. If something more is needed, it could do more.
Tony, I'm also looking at core European bonds, and they're actually supported by the take-up for ECB TLTRO. Are we going to see more of these operations in the future?
Yes, because the extension of credit to households and businesses is certainly a major part of fulfilling the mandate that central banks have. All central banks can do is print money in the end, and they printed lots of it. They did in 2008 and 2009, but it was a failure in a sense because banks didn't extend credit. So the TLTRO and other efforts by central banks globally should be geared toward expanding the amount of money that exists, because that, in the end, in a fiat paper currency system is what matters.
What people don't understand here is Tony Crescenzi's got a book out. It's about 4,000 pages. It's like the Old New Testament and the Crescenzi Testament combined. And Tony, you know the microeconomics here. I want you to answer this right now. Everybody's looking at supply dynamics of all this aid to societies in the financial system. Nobody's looking at the demand side. Is there a demand for this wall of money?
There is not, but it can create, fiscal and monetary authorities can create it. Think of Europe and its 750 euro plan to aid the recovery fund. It was a outstanding idea, and it'll make the European Union, by the way, the largest safe asset issuer of bonds in Europe. But within the plan, 30% of all loans and grants must be put toward green initiatives. And one of the ideas is to create 1 million electric vehicle charging stations. So it can create demand for money as the fiscal authorities encourage the growth of certain types of businesses. And I should quickly add the womenomics and fixing the inequality problem would do a lot too if we furthered investments in human capital.
Tony, thank you so much. I should note out that the green initiative they're considering in the United Kingdom is a putting green in Francine Lacroix's backyard. Tony Crescenzi of PIMCO, thank you again as well. Red and green on the screen here right now. There's no other way to put it. Dollar strength. We see that again. Really going to be interesting to see. I'm less worried about the market like through the day, and at 2:45 p.m. margins up, and the afternoon gets sort of nudgy. What are we going to see there? We'll be briefed before that moment by David Costin, of Goldman Sachs, our chief U.S. equity strategist, must listen, must watch for global Wall Street. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Surveillance. Good morning, everyone. From New York, from London, Francine Lacroix and Tom Keene. I want to make you aware, in America, the Chancellor of the Exchequer, we should see headlines here at some point, and then perhaps he will speak in the 7 o'clock New York hour as well on his support for Prime Minister Johnson's beleaguered economy. Let's look for that this morning. Right now, this has never happened before. Except it has. Jack Fitzpatrick joins us, Bloomberg government reporter, on the chaos of the American election campaign. And all you need to do, Jack, is go back to 1800 and Adams and the Revolution of Thomas Jefferson to know all of this has happened before. Some of the similarities are uncanny back over well over 200 years. Jack Fitzpatrick, what do these two candidates do to get to this crucial debate Tuesday?
On Tuesday's debate, my goodness, to be honest, Washington has had the oxygen sucked out of the city with the focus on the Supreme Court nomination, which I am sure will dominate some of the attention there. Obviously, though, the coronavirus still a massive topic. I have to admit this is going to be a little bit difficult to predict, given the circumstances.
I mean, this is the beginning of my coverage on this, folks, and I would suggest that we've been woefully inadequate in trying to anticipate this debate. Chris Wallace moderating at Case Western Reserve in Cleveland, Ohio. Does the location matter, Jack? I mean, they're going into a battleground state. Maybe Ohio's not the new Pennsylvania or the new Florida, but does it matter where the debate's held?
On a national scale, I would say not as much as usual, especially as you just hinted at. One of the interesting facets of this year's campaign is Ohio's status as a swing state, or potentially less of a swing state than it usually has been, with Democratic focus shifting a little bit to the Sun Belt and really all the other Rust Belt states that appear a little bit more competitive. Better better polls for Biden in Pennsylvania, Wisconsin, and Michigan, really, than Ohio. This kind of shows you what the last 4 years of maybe the RNC in 2016 being held in Ohio helped them. But I don't think this would have the same impact as in a normal a normal campaign season in terms of the impact of the location.
Jack, yesterday we heard, President Donald Trump saying he wouldn't commit to a peaceful transfer of power after the election. I mean, what are people in Washington saying? What is the Republican Party saying? What is Congress saying? Are they just ignoring and treating it as noise, or are there really conversations about what to do?
In a large sense, people in Washington have treated it as noise, even though that sentiment is essentially what we've heard pretty consistently from the president. A lot of the time he will talk about the only way he can imagine losing is if there's something wrong with the process or something along those lines, and then staffers sort of walk it back. But we've heard consistently enough from the president that he wouldn't view his own loss as valid for it to clearly be concerning. Maybe more concerning is that no, there really aren't specific talks among lawmakers that have come out into the public about what to do about that, how to handle it. If there is some sort of constitutional crisis at the end of the year, even though we've gotten signs that this is a possibility, it seems like there's something that could take a lot of people by surprise, just by virtue of people maybe not wanting to think about it realistically a couple months out.
Okay, is there any way that actually he's losing support from Republicans, either because of this or also what's happening with the replacement of Justice Ginsburg?
From Republican lawmakers, no. From Republican voters, he's been behind in the polls. You could potentially argue that there's been a slight tightening of the polls. But, when you look at the response to Justice Ginsburg's passing, you only have seen Senators Murkowski and Collins say that they shouldn't hold a vote. Really, the loyalty to the president is pretty much exactly what it has been for the last few years on any controversial topics among Republican lawmakers. There hasn't been really substantive pushback on his comments yesterday, at least not yet, and the Supreme Court opening probably reinforces that, because a lot of the people in Washington who are uncomfortable with the president's rhetoric really do want conservative justices.
Thanks so much, Jack Fitzpatrick. Great overview there, and particularly as we begin to look at the debate, which we will see on Tuesday. The phrase is simple: rethink, rebuild, recover. No, that's not me and Francine trying to get kids' homework done. That's aviation, and that means Guy Johnson. It's a virtual conference. Guy Johnson will be virtually having as much fun as he usually has at Frankfurt. It's the World Aviation Festival with all sorts of people, not funny, absolutely beleaguered. There's no international travel, down 92%. These are important conversations with our Guy Johnson, the World's Aviation Festival. Stay with us. Futures up 3. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is Bloomberg Surveillance. I'm Rishika Gupta with the Bloomberg Business Flash. Wells Fargo's CEO has apologized over comments that the struggle to find experienced black executives was partly down to a limited talent pool. Charlie Scharf initially said they were misinterpreted before issuing an apology, saying they were insensitive and showed unconscious bias. JP Morgan is set to pay close to $1 billion to resolve U.S. market manipulation investigations. Sources told Bloomberg of the potential record settlement involving alleged spoofing. It could be announced as soon as this week. The accord would end probes by the Justice Department and industry regulators into whether metals and treasury traders rigged markets. And that is your latest Bloomberg Business Flash. Tom Francine.
Ritika, thanks so much. Headline here, the euro coming under weaker in the last 20 minutes or so, 116.44. Francine?
Tom, I'm looking at a bit of pressure on equities. Now, this is partly to do with what we heard from the Fed and, of course, the fact that there's concern about the next phase of the central banks. Also, a bit of concern, of course, about some of what we've heard from central banks around the world, not only the ECB, but also Norges Bank. Coming up, we speak to Edmund Phelps, Nobel laureate and Center on Capitalism and Society Director. We talk about the economic plan in the U.S. elections.
ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishka Gupta with the Bloomberg First Word News. TikTok owner ByteDance is asking a federal judge to stop President Donald Trump from banning the video app, removing it from U.S. app stores this weekend. It comes as Beijing is threatening to kill off a deal over what state media calls dirty tactics and an American trap. Who will own what in a new global TikTok is still a contentious issue. And Japan's new Prime Minister Yoshihide Suga has held his first phone call with his South Korean counterpart since taking office. Suga told President Moon Jae-in that the neighbors should work to resolve their strained relations. The talks proposed by South Korea were the first contact in 9 months between leaders of the two countries. Relations between Japan and South Korea deteriorated to their worst levels in years under Suga's predecessor, Shinzo Abe. Fed officials are reiterating the need for more fiscal stimulus, saying it's critical for sustaining the economic recovery. But there is pessimism Congress can quickly deliver on a new aid package. Chicago Fed President Charles Evans is concerned it won't be forthcoming, and his Boston counterpart, Eric Rosengren, thinks it may not happen until next year. Global news 24 hours a day on air, and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. On this Thursday, let's listen to a president speaking on Wednesday.
We're going to have to see what happens. You know that I've been complaining very strongly about the ballots, and the ballots are a disaster.
I understand that, but people are rioting. Do you commit to making sure that there's a peaceful transfer of power?
We want to get rid of the ballots, and you'll have a we'll have a very peaceful. There won't be a transfer, frankly. There'll be a continuation. The ballots are out of control. You know it, and you know who knows it better than anybody else? The Democrats know it better than anybody else.
The president, without question, he is our most eclectic Nobel Prize winner, with great apologies to the great Paul Samuelson and Kenneth Arrow. This would be Edmund Phelps of Columbia University. He is in his 87th year and is writing like a 35-year-old PhD candidate of long ago and far away. Let us read Ned Phelps here. Trump is the polar opposite of Joe Biden, a politician who understands precisely what the U.S. economy needs. The president stands in the way of the nation regaining a sense of flourishing equity and social harmony. Vice President Biden, having grown up in the steelmaking region of Pennsylvania, can hardly be blind to the deprivations and pain of low-paid workers. A fired-up Ned Phelps, and we're thrilled that he could join us from his Center on Capitalism and Society at Columbia University. Have we broken the Rawlsian bind, Ned Phelps? I mean, on a great philosophical level, it seems like we've shattered our political and societal relationships. How do we get back to some sense of stability?
Oh my gosh. I think we have to start by electing a plausible group of people to manage the government. You know, I don't think any of us realize how very important it is that the public sector be adequately managed. It was Paul Volcker who grasped that years ago, set up some institutes for study of government management. But you know, we're just miles from that. We have a bunch of incompetent people who run our government.
It is the price, Ned Phelps, of weak economic growth. You have led with a discussion of productivity, a discussion of our dynamic needs. What's the Phelps prescription for the giant fiscal stimulus that we know is coming in February or March?
Well, let it come. I don't have any. I haven't given any thought to what directions it should take. Let's hope that there's something not just to encourage consumption. Let's hope that the giant cuts that come in as you put it in February and March. Let's hope that they address heavily the need for an investment stimulus, and maybe let's get some R&D going also.
Professor Phelps, what would be the prescription right now for the U.S. economy? And if you look at the plan, for example, of Joe Biden, what is good in it and what could he do better on?
Well, I think everything that Trump has stood for these past 4 years are just a disaster. It's just wrong thinking gone completely rampant. And the main thing we have to do is get ourselves out of that. What I'm referring to is the costly corporate tax cut. It didn't boost investment and growth, and then there's the rampant deficits, as if deficits are just fine. That cannot be good for the economy in the long run. Creates a lot of wealth, stimulates consumption, squeezes investment. Very bad. Another thing is the habitual threats to American businesses to do this, do that. This Mussolini-like interventions. This has to be stopped. That's a terrible precedent. Another thing is this crusade against trade. We need a lot of trade for productivity growth. We have a lot of high-skilled people who want to work for Silicon Valley. We can't get them because of a stupid resistance to immigration. And then we've the latest outrage, of course, is the letting the forests of the West burn down. That is another one of the appalling instances of bad government. And so, I mean, we've got to get the government out of the way. And well, not altogether out of the way, but got to get the bad stuff out of the way and start cultivating the good stuff.
Okay, but Professor Phelps, how would you deal on trade? So if you look at, the ins and outs of the economy, productivity, but also this race towards, the technology race, how would a Biden administration still hold China into account whilst getting what they want?
I'm a long way from being able to speak for the Biden administration. They've just discovered me in the past. In the past day or two, but I certainly hope that the Biden administration will take an enlightened view toward trade and everything else.
Ned Phelps, thank you so much. Edmund Phelps of Columbia University, a blistering essay in Project Syndicate today on his support of Vice President Biden. Worth reading, whatever your politics. Futures up 3, down futures up 33. NASDAQ goes the other way. I'm going to call it a churning market right now, but still, dollar strength is the lead story this morning. Coming up as we all recalibrate on this horrific pandemic, Jason Farley, the Johns Hopkins University. Futures up 3. This is Bloomberg.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Jason Farley. He's Johns Hopkins nursing professor. Professor Farley, as we grapple, thank you for joining us, as we grapple with the number of infections rising, we also look at vaccines. And there's now this huge worldwide debate on whether it's okay or ethical to inject people with the virus to then see how they react, healthy patients that would put themselves forward for it. What's your take on the ethical situation and dilemma we're facing with?
Well, I think, we when people are weighing to take a vaccine or not, they need to understand that there's a lot of different types of vaccine. There's no one of the 8 major candidates out there. There are a variety of different forms. Some use viral vectors to get the vaccine into the host, and some do not. So it depends on which vaccine you're looking at. Some vaccines actually just turn on the body's ability to make protein. So each vaccine has a different flavor, and we don't know which one's going to rise to the surface. In terms of the ethics, right now it's more unethical for us to do nothing and to sit back and watch, the case nodes rise and watch the mortality rates rise. And so right now, science is using putting its best foot forward to accelerate vaccine development, but as you've seen in the news, as safely and ethically as possible.
There was a Pew polling that only 51% of Americans are likely to take the vaccine. Are you, is this disconcerting, or is this normal in this kind of phase for people to be wary of it?
Well, the poll was conducted pretty previously as well, and demonstrated that upwards of 70+% would previously take it. I think what you're seeing with that decreasing confidence in the American public in this poll is the confusion that's being bestowed upon them based on so many just changes. Obviously, there was the AstraZeneca trial that stopped early, which for a safety concern, and is now going in the UK, and hopefully will restart soon in the United States. There's also this, the FDA announcement that they want to add stricter safety requirements, and then of course the White House yesterday saying that they would potentially overrule that decision. So, one of the most important tenets of communication during the pandemic is clear, concise, and consistent messaging. And right now, the scientific community and the White House are not on the same page, and that leads to confusion and mistrust.
Jason, I look at the Johns Hopkins work where you have worldwide leadership and the dynamics of all this, and I really see a change dynamic between case growth, particularly in the United Kingdom, in Italy, and France, but also in the United States. Cases are growing even as deaths decline. Explain the difference in those two vectors of a worry over cases growing even while the vector of deaths is actually doing pretty good.
Well, when we've hit the start metric of overall 200,000 Americans dead, I guess I would push back slightly that we're not doing all that great in given those numbers. So it's the third leading cause of death in the United States in 2020. But what I would say is that we are growing our knowledge and skills about everything from the types of medicines that might have some therapeutic benefit, as additional the types of mechanical ventilations and other therapeutic interventions like proning. All that information we've now had about 7 or 8 months to gain new insights on the clinical management of patients. We've also had 7 or 8 months for people to gain greater experience in caring for them in the intensive care unit, all of which will drive mortality down. Ultimately, we really need to control caseload so that we control volume, because volume in an ICU and expanding ICUs to non-traditional